This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Apple's still minting more money than God, right?
Geopolitics front and center for global Wall Street.
With Lisa Mateo on markets.
Stocks are coming off of another record high.
And Michael Barr with news.
U.S. Secretary of State discussed the conflict in Gaza.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, John Tucker in for Lisa Mateo. An inflation report at 8:30. We'll go in moments to Kathy Jones at Charles Schwab to really dive into this. Everybody telling me it's a snooze fest. Paul, I flat out don't agree. Inflation, particularly beneath the headline data, is always a rich set of information.
Always a rich set of information, Tom. CPI, I guess month to month, we're going to look for 0.1%. That's kind of the consensus. That's a little bit less than last period, so that's the good news. I guess you do the ex-food and energy, maybe 2%, 0.2%. So we'll keep an eye on all that stuff. At 8:30, we'll have it for you.
Reading Le Monde in Paris, where they have the same disinflation, but in French, they don't have, well, I'm faking it. I got my book out, and bonjour, où est la bibliothèque? Yeah. Anyways, I'm doing it, and they don't have the real income growth we have. So we'll have to talk. We've got Harvey coming up from a university in North Carolina here to give us wisdom as well. Richard Haass will join us on the Eastern Mediterranean. And most importantly, we will go in about 6 minutes to Rob Carolyn on this horrific hurricane. Let's get right to it on YouTube. Good morning across the nation. Good morning worldwide from the Interactive Broker Studios. Our Bloomberg business forecast, John Tucker.
All right, Tom and Paul coming off fresh records for the S&P 500, the Dow Jones Industrial Average, and earnings season underway. Delta Airlines forecasting profit sales short of Wall Street estimates for the final months of the year, suggesting a slow recovery from a challenging summer travel season. Domino's Pizza, love Domino's, trimming its 2024 projection for sales growth and new locations. Slower, no comments please, slower consumer spending hitting the restaurant industry. China's central bank has set up a swap facility to provide liquidity to institutional investors to buy stocks, part of the broad stimulus package announced earlier that ignited a rally in the equities there. And the probability of the Fed on hold in November is 21%, up from 7% just after the payrolls report. This follows what appears to be, I'll say, a hawkish tilt from the Fed minutes. And this is an important one. More than 70 million Social Security recipients will learn today how big of a cost of living increase they'll get to their benefits next year. In advance of the announcement, analysts at least are predicting the increase will be somewhere around 2.5%. Right now, the Dow futures down 60, S&P E-mini futures 12 points lower. The NASDAQ futures right now down 55 points. 2-year yield 4.03%. That's a little change. 10-year also a little change, 4.08%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Paul and Tom.
John Tucker, thank you so much. Paul, what is this, Northwestern month?
I don't know.
Everybody's from Northwestern.
Everybody.
Kathy Jones joins right now. Multiple degree from the school near Chicago. Kathy Jones with Charles Schwab. Let me rip up the script right now. Should those younger at Charles Schwab anticipate receiving Social Security in the future?
Yes, I think they should. It is the third rail of politics. No one's going to touch that. So, and it's really not, I always say it's not really a difficult math problem. You can solve Social Security if you want to without a big fight. And you probably raise the cap on contributions, increase the contributions in other ways, and push out the retirement age a bit. And, the math 80, can be done.
80 is the number you're working on.
Yeah, I think 80 is,
John,
80 is a good number.
Good enough for you?
Yeah, that should work out just right. John's should be dead just before collecting.
John's never retiring. Kathy, what do we do here? I'm looking at the 2-year. We're back at 4% on the 2-year. That's not bad, even for the John Tuckers of the world who are used to the big returns. Do I sit there my 2-year, or do I take some credit risk here?
Yeah, well, we have liked investment grade credit risk all along. I think that, when you look at the corporate sector, it's in good shape. Balance sheets are strong. There's enough cash flow there. So you can pick up an extra 75 basis points or so in investment grade credit. If you're in a higher tax bracket, which everybody I know here, it must be, municipal bonds offer a pretty good tax equivalent yield for people in high tax states.
Boy, I'm looking at the U.S. corporate high yield total return. This is the Bloomberg thing. The Bloomberg U.S. corporate high yield total return index up 7.47% this year. That's not bad.
And it's not bad. It's the power of the coupon, right?
Yeah.
You've got some high coupons there. So even if the price is just bouncing around sideways, you've got the coupon there to give you that income flow.
All my radar's up on this inflation call. I got way too many pundits telling me it's really not a big deal. It's always a big deal. How will you digest what you see at 8:30?
Yeah, we're going to look under the headline, which we think will be pretty benign, and see what the areas are that are still bubbling up.
Is service sector still bubbling?
Somewhat. It has certainly come down. Everything has trended down, which is good news, but is it core services trending down enough to satisfy the Fed? That's the question going forward.
I'm fascinated with this, Paul. I mean,
I know.
I do not remember an inflation report as non-anticipated as this one.
Yeah,
I still
that's a good
buy
point.
it for a minute.
That's a good point. We also have initial jobs claims here. We'll stay on top of that at 8:30 as well. Kathy, are there sectors in the fixed income space that you like right now, given where we are in the economic cycle? How do you guys, when you talk to the Charles Schwab clients and about fixed income, where do you try to steer them?
Yeah, so we look at duration, and we pulled in our duration call, earlier because yields fell so much. So we're sort of intermediate term, lower intermediate term duration, and then we look at credit and where the opportunities are. And we still like, the investment grade area. We like preferred securities, which doesn't get a lot of play.
Talk to us about preferreds. Why do you like preferreds? Why do you think investors should have some exposure to preferred stock?
Yeah, so the two big risks around preferreds are the duration, the very long duration, and the second is they're mostly issued by bank and finance companies. So we think both of those are pretty well mitigated in this environment. We're not looking for long rates to go up a huge amount from here. The coupon's pretty high. And if you're buying them from, stronger banks, you have to be selective. We're not worried about the credit risk side. And those coupons are high. Also, supply-demand is in your favor. There's not as much issuance now, and there's still considerable demand. So actually, within the universe we watch, double-digit returns year-to-date in preferred. So we wouldn't allocate all your portfolio to preferreds, but we think there's an opportunity there.
There's a small window there, maybe 4 or 5 years. I sold a ton of preferreds for my clients. But then that was it. U.S. versus non-U.S., how do we think about that?
Yeah, the trouble with non-U.S. for so long has been the dollar's been strong and the yields have been higher in the developed markets in the U.S. So there wasn't a huge amount of opportunity there. We're starting, if the dollar comes down as the Fed lowers rates, we might get a little bit more opportunity on the total return side in developed markets. EM actually looks a little bit more favorable because when the dollar goes down, EM tends to do well.
20 seconds into 2025, late 2025. Am I clipping a coupon with the Kathy Jones scissors, or can I actually make some Liz Ann Saunders total return?
Yeah, we got a little bit of total return, but it's mostly going to be the coupon.
Okay. Because of the hurricane, we got to go short. Kathy Jones, let's do it again soon. She's with Charles Schwab. There is some panic, and so we go to someone that doesn't panic. Our Bloomberg meteorologist, Rob Carolyn, joins us now after an exhausting night. Rob, tornadoes like I've never seen. Were you surprised by the tornadoes?
No, Tom, other than the intensity, and even that's understandable. I mean, they had 126 tornado warnings yesterday in Florida with 31 confirmed tornadoes. Landfalling hurricanes are notorious tornado producers because what happens is as the feeder bands move across the land, they slow down. So that starts to import the spin, or what we call helicity. It gets them turning and spinning up. Because the jet stream was close to the hurricane, with it being October and rather September or August, we had the type of venting that we get aloft, like we'll see in the Midwest with tornadoes. So we got the spin going on the surface, and then venting them aloft caused them to be larger and longer lasting yesterday in Florida than what we ordinarily see. So it was the strength that was surprising. They had some rather large tornadoes in central and eastern Florida yesterday.
Rob, talk to us about storm surge. I know that was a real concern for the good folks down in Tampa Bay. What do we see here? What are we seeing?
So what happened, Paul? The storm made landfall just south of Tampa, the city itself, near Lido Key. So the winds blew Tampa Bay out into the Gulf. The flooding was not bad in the Tampa Bay area, so that was good. But for areas from Bradenton to Sarasota, down towards Port Charlotte, we talked about it yesterday morning, they ended up with a maximum storm surge of around 10 to 12 feet. We have a storm surge this morning now in northeastern Florida on the backside of the hurricane. The storm's moved offshore east of Cape Canaveral. We're seeing about a 3 to 6 foot storm surge right now from Vero Beach past the Cape all the way up into southeastern Georgia, and storm surge warnings remain in effect for northeastern Florida this morning.
Tell us about the power of the winds given the heat of the water. Is 120-mile-an-hour wind now the same as it was for Sandy or Hurricane Bob years ago?
Actually, no, because you're pushing warmer air, so it's lighter. So down in Florida, the air doesn't weigh as much. It's not as dense. When Sandy hit Delaware and New Jersey, it was cold. A couple of days later, we had a snowstorm across Long Island. So actually, that storm, Sandy, was pushing heavier air at the time. The good news is the highest winds now are on the east coast of Florida. We're still seeing some gusts over 70 miles an hour, but we're done with the 100-plus mile-an-hour winds across all of Florida.
So, Rob, where does this storm go now? Are the folks on the East Coast do they have to deal with it at all, or is it just go out to sea?
It's headed out to sea. It's just becoming an area of low pressure, moving out into the Atlantic. Next week, we'll be keeping a watch on the northwestern part of the Caribbean Sea because there is the potential for some development. Some of the models have been suggesting that we're not done with her. No,
There's something behind you.
It's October. Aren't we done with this?
No, end of November, guys, and the Gulf is warm. So, yeah, I look back to 2017. The Virgin Islands were hit by 2 hurricanes within 2 weeks. So this is not out of the ordinary.
He's just doing this to stay employed.
I know, exactly. I thought October would be
Rob,
done with
Hurricane Kirk, is it going to land on Europe? It's out there somewhere.
It's in the process of dissipating well south of Iceland. They'll get an area of low pressure out of it, but it's not going to be that potent.
Reykjavik, beware. We love you. Rob Carolyn, thank you so much. The absolute best at this. Knowledge about hurricanes. You've never seen Rob Carolyn.
All right.
I saw a guy yesterday. These idiots are out there doing the team coverage thing.
I know.
And he was blown right over.
2 weeks ago, I was in Ireland, and we're sitting there on the side of the road talking in the northern part of Ireland on the North Sea. And the guys say, when you guys have your hurricanes in southeastern United States, a week later, we go to Ireland to surf and Scotland to surf because that's when your storms come and that's when we surf. I'm like, really? Yeah, he says it takes like a week to get over there, but it makes its way over.
I saw a video. Wow. It's like where Poldark lives in Cornwall.
Yeah.
Down the tippy tip of and the waves are ginormous.
They're huge, crazy.
They're like
in the North
Hawaii
Sea.
waves.
Yeah.
Well, by the way, Anderson Cooper got hit in the face with something. Like a coconut or
I give him.
like
he did some great coverage. I'll give Anderson Cooper some major slack. He did really important coverage from Haiti years ago.
Yeah,
I mean, like actual, like in a weather crisis kind of thing. I'm gonna cut him some slack. I don't know. Can you see Barr? I couldn't see Barr.
I can see Tucker and Barr. I can see them out there.
Oh, we'd hit the local bar.
Yeah. Broadcasting live.
It was really sport down there, including a crane down in downtown Tampa.
Yep.
I don't know much about that right now. But we'll try to get Gurgura's done the hurricane thing. I mean, he's
North Carolina. He knows what he's doing.
He's got the LL Bean thing going.
Yep.
The waders up to his waist and all that. We've got an inflation report. It's in an hour and 15 minutes. It's important. A statement on our consumer price inflation. Of course, something about the path for the Fed, particularly with the minutes coming out, really showing some angst about that 50 basis point rate cut. We'll see what they do. Maybe we'll learn more at 8:31. Futures, negative 13, the VIX 21.07. We're on YouTube. Subscribe to Bloomberg Podcasts. This is Bloomberg Surveillance.
markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. After records for the S&P 500 and the Dow Jones Industrial Average in yesterday's session, futures now all point to a slightly lower open on Wall Street this morning. Bloomberg Economics out with the note this morning expecting a subdued headline CPI reading for September, but they also think the core print is going to be a little more robust. Of course, that's out at 8:30 Wall Street time. We'll have that live for you. Insurance stocks, they're rallying in the pre-market trading after Hurricane Milton weakened to a Category 3 storm as it slammed into the west coast near Tampa, Florida, not to mention the human toll, especially from the tornadoes that touched down. Still waiting to hear about that. BMW and Mercedes-Benz Group seeing car sales slump in China in the third quarter. Weak consumer sentiment in the biggest market weighing on luxury spending there. Deliveries of BMW and Mini-branded cars falling 30%. The steepest drop in more than 4 years. Mercedes sales, they dropped 13%. IKEA sales taking a hit as the flat pack furniture seller lowered prices in a bid to remain affordable to its consumers. The company's currency adjusted sales falling 4%. And TD Bank going to pay about $3 billion in penalties and face restrictions on its U.S. growth in a settlement with regulators over its failure to catch money laundering. That, according to the Journal. S&P futures down 10, Dow futures down 56, NASDAQ futures 46 points lower. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Paul and Tom.
John Tucker, thanks so much. Futures, -11. Joining us now from Macquarie, the Australian Combine Head of Economics Americas, David Doyle, on, of course, the inflation report we see this morning. Is the disinflation vector, David, in place? Whatever we see today at 8:30, can you still state disinflation is in place?
I hesitate to see whatever we see. I mean, that is our team's view that you will sort of have data that support ongoing disinflation. But I would stop short of saying whatever we see, right? We've been proven that the data have surprised in either direction before, so we won't rule that out. But that's certainly our base case heading into today's print.
In today's print is a decision at the November 7 Fed meeting in flux?
Yeah, I think so. What's interesting is that after the strong employment report last week, I think the decision has moved from being, sort of a debate between 25 basis points and 50 basis points at that meeting, and now it's between potentially a hold and 25 basis points. I suspect the data will support them continuing to go, but again, if we get that right tail surprise on the upside, potentially they hold. So I do think that this number does matter, particularly after the employment data was strong last week.
He can stay around.
Yeah, he can stay around. He's pretty good.
David Doyle says stay tuned until 8:31.
So, David, I mean, if you're the Fed, do you feel like you've got your arms around this thing, that you've kind of got inflation under control, but you got an economy that's still giving you some solid growth? Do you feel pretty good about where you are at this point?
Yeah, I mean, look, I stand in awe of the U.S. economy. It has been just a bellwether. It's done extremely well despite the rate hike cycle that the Fed's done. I think that they sort of took out some insurance on that expansion with the 50 basis point cut. I think they'll wait and see, and sort of they'll fine-tune policy in line with what the incoming data is suggesting. I don't think that they're in a rush, to cut. If the data proves to be overly strong, then they'll hold their fire. But if the data comes in line with what they expect, and I think with what most economists expect, I think they'll proceed with further rate reductions. And I do think they should be, pretty pleased with how things seem to be evolving, particularly given how unemployment has now ticked down for consecutive months.
If we're up 20% since 2019, I read an article, like I said earlier, out of France, where they're really having trouble with inflation because real wages aren't like in America. They don't have the wage lift we supposedly have. But David Doyle, where on the x-axis do we get beyond the 20% lift off of COVID? Does that happen this year, next year? Dare I say, do we have to wait till 2026 when the Mets once again lead the way in the National League?
Look, I think it will take some time for consumers to, get past that 20% lift that you're referring to, Tom. I think we as economists tend to think of things on a year-over-year basis.
Yeah.
That's what the Fed does. That's what we do. That's what markets focus on. But you're right. Consumers tend to look at what the change in prices has been over time, and there's still a bit of a shock from those COVID years. So I do think that will take some time, whether it be 2025, 2026. We'll see how the inflation expectations data play out. But I think the point you raise in your question is also very relevant for the U.S. consumer. Real wage growth is positive now. There was a brief period where it was negative in 2022, 2023, but it's positive now, and that is a good thing for consumer spending, a good thing for economic growth.
I mean, Paul Vettville just said, you guys used to have steak twice a week. Now we're drinking hamburger. I looked at the price of steak the other day. You talk about a 20% lift, like a reset on the price. It's ridiculous.
Nothing wrong with Hamburger Helper. Grew up on that stuff. In the 1970s, that was, number one in our household.
My father was so diplomatic. This again?
Yes, exactly right. Hey, David, you mentioned the consumer. What is your view of the consumer here, given the labor market, given interest rates coming down? What is your view of the consumer these days?
Look, we're upbeat. I think the consumer spending gains, back in 2022 and 2023, there were some challenges with them because they were driven in part by a fall in the savings rate and the decline of those excess savings that were built up in the pandemic. So there was a question on their sustainability. But spending gains at the moment are underpinned, as we just talked about, by positive real wage growth. And when you have that dynamic, it suggests that it's sustainable. And what makes us even more encouraged, for the consumer going forward, is that a lot of the cyclical components of spending came off, right? So you almost had historically goods consumption only declines during recessions. Now, the period in 2022, 23 was an exception there. You had the decline, but you didn't have a recession. And so it's almost like we're set for an upswing here in spending, in our view.
Lauren Hochfelder was in yesterday, David, from Morgan Stanley. Everything's great in real estate. That was a summary. Baloney. David Doyle, what does OER look like? What does inflation or disinflation look like in rental properties?
Look, I think there's a big divergence there, as the Fed's discussed, between market rents and measured rents. OER, interestingly, surprised on the upside in August, and I think that's a relevant point for the current print. Our expectation is that probably proves to be a blip, and so you could get some relief relative to what you saw in August from OER when the data come out at 8:30 this morning.
David, it's been wonderful. Don't be a stranger. David Doyle with us. He's the Macquarie. We didn't ask him about Aussie renminbi.
No, exactly.
Thank God for that.
Cross-rates.
It's a great bank. Macquarie out of Sydney and Melbourne. I was lectured once. Some guy from Perth.
Okay.
He was saying, you don't say Melbourne correct. It's not Melbourne.
It's not?
He said, watch the Mel Gibson movies. He said, watch the Mel Gibson.
All right.
Mad Max.
Very good.
Melbourne.
Good stuff.
They mentioned it. Melbourne.
Okay.
Melbourne.
I'm with you.
David Doyle, thank you so much. Not out of New York, head of economics for Macquarie. Paul, we haven't talked about the media wars. I think it's been like a month. And it came up yesterday because when I'm streaming, I think it's Amazon, there's like 6 other streamers on there.
Yeah.
And they go, you can get, the John Tucker show or whatever. And then when you get there, it's surprise, you got to pay a fee.
Yeah.
That's like the new.
Well, the new for me is I almost on a weekly basis or monthly basis, I go through and I say, what am I paying for? And I just click off, disconnect, and boom. They make it so easy as compared to, yourself, your telephone company or your cable company, which it's a 6-hour conversation on the phone, pushing a million buttons and talking to people to disconnect.
I think Apple's really led the way on that. I mean, you go into your thing on Apple and you get rid of all this stuff that afterthoughts.
And if somebody complains, then maybe I'll consider putting it back on.
Remember, YouTube is free for the most part.
Yes, it is. YouTube. And John, you're all over the YouTube. That's where you get most of your worthless trivia comes from YouTube, correct?
Absolutely.
Yes,
100%.
I'm going to do a shout out here. I did this with my own money. Redo Keeper of the Amex said, no, you're not. It's YouTube Premium. It's clean. It's got noise.
Yeah, but it costs
out.
money.
It costs money. I pay for it. Okay, I tried to sneak it. It's a Redo Keeper of the Amex.
Oh, Redo's getting a
that
bill
went down in
from
flames.
me and Alex from Disney World. We went large.
Yeah, I heard. You did the Goofy Breakfast?
We did.
Like $228
exactly.
for the two of you. Redo will see that coming in. Oh, the Goofy Breakfast. We are on YouTube, whether it's YouTube Premium, YouTube Free. We're thrilled with the build-out of Bloomberg Podcasts. Subscribe. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom, with his Bloomberg Business Flash. After record closes for the Dow Jones Industrial Average and the S&P 500 in yesterday's session, traders this morning awaiting inflation data could show whether the Federal Reserve will opt for a slower pace of interest rate cuts. CPI, 8:30 Wall Street time. Earnings season underway. Delta Airlines kicking off third quarter season. Profit and sales forecast falling short of expectations. JP Morgan Chase and Wells Fargo is going to report tomorrow, and net interest income. That's going to be the immediate focus for those companies. Investors are going to want to see if profits are robust enough to sustain this year's roughly 20% rally on the S&P 500. Companies in the index, they're expected to report a 4.7% increase in quarterly earnings from a year ago. This according to data compiled by Bloomberg Intelligence. That's down from 7.9%, the growth projection back in July. U.S. insurance stocks, they are rallying pre-market after Hurricane Milton weakened to a Category 3 storm. Supply chain services provider GXO Logistics rising on the news of a potential sale. And the drug maker Pfizer slipping after two of its former executives decided not to be involved in an activist campaign against the firm. Dow futures down 44, S&P futures down just about 10. The NASDAQ futures right now 41 points lower. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Paul and Tom.
John Tucker, thanks so much. We welcome all of you worldwide on YouTube, across the nation, on your compute, on Apple CarPlay, Android Auto. And this is a joy. Without question, our conversation of the day is our conversation with James Stavridis yesterday really shed some light on where this nation is going with their foreign policy. Richard Haass has served both Republicans and Democrats. We're not going to talk about Harris-Trump. He'll serve as Secretary of State for either one, whoever wins. But we will speak to Richard Haass about the many foreign policy issues of this nation. Richard Haass, you invented the Internet and International Relations at CFR, the Middle East Challenge for the United States, James Lindsay, Stephen A. Cook, and Amy Hawthorne. The Middle East Challenge, where are we in our Eastern Mediterranean policy in 12 months?
I would think the Middle East looks not dissimilar from the way it looks now, Tom. When peace is not at hand. This is think of it as like California, multiple earthquake fault lines. So Middle East has the Israel-Iran fault line. There's Hezbollah, there's Hamas, in Gaza, there's the West Bank. All of these fault lines are going to be churning to one degree or another. At the moment, diplomacy has virtually no role, and these are going to be low or maybe medium intensity conflicts.
What happens if you stop talking?
Not a whole lot. Diplomacy hasn't shaped things. All these calls for ceasefire have been more rhetorical than real. And the real question right now, I think, how far does Israel plan to go in Lebanon? What's their definition of success? Will Israel introduce a strategic after policy in Gaza? Will they continue to militarize relations in the West Bank? And most important, what is Israel prepared to do or not to do when it comes to Iran, and how would Iran retaliate?
Richard, how concerning or how surprising is it to you the waning influence of the U.S. during this conflict here? It seems like Mr. Netanyahu and Israel is basically not paying much attention to the U.S.
Well, it seems that way because that's the way it is. Yep. He's discounted U.S. pressure. Better to ask for forgiveness than permission is clearly his motto. He believes he has a base of support in the United States that could challenge any president if the president decides to move against him. Plus, this administration has made the mistake of putting almost all of its eggs in what I would call the persuasion basket. Persuasion is easy to push back against, rather than carrying out a serious independent policy. So for 12 months, we've implored the Israelis not to do certain things in Gaza, and for the most part, they've rejected us with no cost.
July 8th, 14 years ago, Richard Haass presiding, Benjamin Netanyahu, Prime Minister of Israel, at the Council on Foreign Relations. How is he different now from that afternoon, July 8th?
It's a good question, Tom. I think the biggest difference is the political context he's put himself in. He's surrounded by people to his far right, some of whom are literally messianic. And he, as a result, has constrained himself.
Right.
That, plus also his own personal legal challenges, has made him much more of what you might call a wartime prime minister.
And it almost goes to your important work in Northern Ireland years ago, in that Admiral Stavridis just had to say, look, it's 7 million people, I believe he said, 7 million Jews, I can't remember the exact quote, versus Iran with, I'm going to say, 90 million people. Do we understand the smallness of Israel and their requirement to have allies?
Well, it's the smallness of their population, also the smallness of their territory. So, Israel is vulnerable. Or, for example, Iran still has close to 3,000 ballistic missiles it hasn't yet used. No, Israel is dependent on the United States to a large degree for its qualitative military advantage. But again, the Israelis essentially assume that they have American support for the most part.
Do they? I mean, don't we have leverage here in this discussion?
Well, we have leverage if at times we choose to use it, but it's also part of the challenge facing us is how do we disagree, say, with an Israeli government when it comes to Hamas in Gaza? At the same time, we may agree with an Israeli government for the most part in the north vis-a-vis Hezbollah, or obviously versus Iran, and Iran, for example, not being allowed to get nuclear weapons. This is a real foreign policy challenge for any American administration.
What do you think the Israelis will do as it relates to Iran here in terms of their response?
What I'm hoping they do, well, I think what they will respond. What I'm hoping they do is limit their response to going after sites associated with the production and storage of the kinds of missiles that have attacked Israel. I think that would be proportionate. It would check the germaneness or relevance box. I don't believe they ought to be going after energy installations. Iran could clearly retaliate against the Saudis and others, and I don't think at this moment a strike against the nuclear facilities would either succeed or be strategically warranted.
We continue with Richard Haass, the Council on Foreign Relations, Ambassador Haass here on the Eastern Mediterranean. In our next section, many more topics to speak of. You and John Kerry in discussion. I want you to brief now Harrisites and Trumpites on the nuclear threat. Kerry spent a lot of time worrying about Iran pointing missiles. Give us an update, Ambassador.
Yes, John Kerry negotiated an agreement with Iran, which essentially parked the Iranian nuclear challenge for roughly a decade. Donald Trump took us out of the agreement. Since then, Iran has increased the amount of highly enriched uranium, the stuff of nuclear weapons. It's not quite at weapons grade, but it could get there in a matter of days or weeks.
Days.
But, Tom, what's still missing, as best we can tell, is Iran has not put into place what you would call the weaponization. In order to create a nuclear weapon, you need not just fissile material of a certain degree of enrichment. Sorry to get so wonky here. You also need the casing and the explosives and so forth. So my guess is Iran is somewhere from 6 months to a year away, in part depending on help it might receive from the outside.
So if I'm at CFR, I'm having the acclaimed Hors d'oeuvres of the CFR with that coffee and that wine in the afternoon.
I am not responsible for the food and drink anymore.
And somebody says, Ambassador, oh, Israel can just send missiles in and take out the nuclear capability of Iran. How do you respond to that?
They don't know what they're talking about. A lot of the nuclear program is deeply underground and fortified locations, assuming we know where it all is. You can't take out the intellectual dimensions of it. So I think what you would say is if Israel used military force, it could buy some time. It could set back the Iranian program months or even years. But what would happen is it would be reconstituted underground, probably in places and locations far more difficult to take out.
Are you surprised that Israel has not yet responded to Iran more than a week from that last attack?
What they're doing is in some ways responding to Iran by what they're doing in Lebanon. Degrading Hezbollah to the degree Israel has done it is quite strategically significant because Hezbollah was in some ways a powerful Iranian instrument hanging over the head of Israel with hundreds of thousands of rockets that could hit Tel Aviv, hit Ben Gurion Airport. So the decapitation and degradation of Hezbollah is strategically the most interesting thing that's happened in this part of the world recently.
What then do we do with your collective memory of that horrific afternoon, I believe it was, or morning in 1982? How does the U.S. project to Lebanon a new Lebanon if they take out Hezbollah?
Well, but your predicate is the question, can you take out Hezbollah? Not clear to me. And right now there's an interesting conversation going on, Tom. What's the definition of success in Lebanon? Is it to degrade Hezbollah to the point you push them north, so presumably you get a ceasefire, you reduce the threat to Israelis living in the northern part of Israel, 60,000, 70,000 Israelis can go home, or is it to remove Hezbollah as a military entity, as a state within a state in Lebanon. And right now there's a debate going on in Israel, and I expect between Israel and the United States, what is the definition of victory? Just how ambitious ought Israel to be in Lebanon?
This is phenomenal, hugely valuable. We'll continue with Richard Haass here on other topics as well. I do want to touch upon his book, which is a required read. His book has caused more bruises is adults and parents threw the book at smart-mouthed children and said, shut up and read this book. We'll talk about Richard Haass's bill of obligation here in a bit. Futures at -9. We're waiting for that inflation report within the hour. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, and John. Hurricane Milton is barreling into the Atlantic Ocean after making landfall in Florida as a Category 3 storm. It pounded cities with ferocious winds and rains, whipped up a barrage of tornadoes, and caused an unknown number of deaths. It compounded the misery wrought by Helene, but it spared Tampa a direct hit. The storm tracked to the south in the final hours, made landfall last night in Siesta Key. Meanwhile, Florida is beginning to assess the damage and the devastation now that the sun is coming up. Speaking this morning, Tampa Mayor Jane Castor is urging everyone to stay inside and stay safe.
Please don't go outside. Definitely don't drive around. Don't go through standing water. And make sure if you see any trees or wires down, call and report those, and we will get them fixed as quickly as we can.
Fatalities have been reported at a senior community near Fort Pierce on Florida's east coast. St. Lucie County Sheriff Keith Pearson.
We prepare for things, but you can't expect or do anything when we have multiple tornadoes touch down in such a short period of time in our community. It's devastating. There's no words could describe it.
Over 3 million homes and businesses are without electricity. Direct and productive is how yesterday's phone call is being described between President Biden and Israeli Prime Minister Benjamin Netanyahu. White House Press Secretary Karine Jean-Pierre did not release much details, but said the discussion did include Iran.
The U.S. and the Israeli government have had discussion since last week, certainly since after the Iran attack. And so those discussions continued with the president and the prime minister.
Meanwhile, Palestinian medical officials say an Israeli strike on a school sheltering displaced people in the Gaza Strip today killed at least 27. The Israeli military said it targeted militants hiding in a school. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr. This is Bloomberg. Tom, Paul, John.
Okay, we got to talk about this. It would be so exciting. I mean, I saw when Linder hit the home run last night, just the orange and blue, the shock of the orange and blue and the Mets. Michael Barr, the dreaded Tigers have to take him out. But Yankees, Mets, it could happen.
It could happen. It could be that. Remember that Subway Series? What was it, 2000 or something? And yeah, we could have another Subway Series.
I mean, this is just the greatest time of
Yeah,
year.
I mean, and the Tigers are still in it.
The Tigers
we
are
still have to talk to Michael Barr.
Michael Barr, I haven't found this yet. Do we assume Skubal goes tonight, or do they hold him back?
I was thinking about that because my thing is go ahead and win now, get Skubal in, but you might want to wait if we have to have a game.
Are they inventing this platoon thing where they pitch 6 pitchers and they know that when they start the game?
I think they're writing the book on it.
They're writing a book on it.
Their payroll's like $15, yet they're
it's amazing.
It's amazing what they're doing.
Their whole payroll's less than Aaron Judge makes. Is that close?
So,
about $18.8 million, the entire 25, 26-man roster.
Yeah. Jeez. Okay.
Cost of living's lower there in Detroit.
Michael Barr's scheduled to be with us tomorrow. We'll see if we get there as well. We're having a lot of fun with this, and I have to admit, at 1986, I was scarred for life.
Yeah.
Lenny Dykstra, oil can Boyd through the orb in. The ball has never landed.
Yep.
It's still over the Charles River.
Still going.
It's still going. It's in orbit somewhere. Anyway, that's exciting. Good morning to Steve. And Sophia Drosas. I mean, we have to get her in.
Yep,
She's the reason they've done this at 0.72. Futures at -8. We're with Richard Haass.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg newsroom with this Bloomberg Business Flash. Equity futures pointing to a slightly softer open right now. Consumer price data expected to show inflation moderated further, and that may support the view the Fed will continue to easing policy. Delta Airlines earnings forecasting profit sales falling short of Wall Street estimates. Domino's Pizza trimming its 2024 projection for sales growth. They're blaming slower consumer spending. Right now, ahead of the open on Wall Street, Dow futures down 37. S&P E-mini futures, after yesterday's record close, right now down 8 points. The NASDAQ futures 35 points lower. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Paul and Tom.
John Tucker, thanks so much. Bloomberg Surveillance here with the inflation report coming up in an hour and 10 minutes. Brought to you by Interactive Brokers, their portfolio analyst. Consolidate, analyze all your financial accounts on one powerful dashboard for free. Sign up for Portfolio Analyst at ibkr.com/free PA. The book is 200-some pages, but the index is 100 pages, so it's not as long a read as you think. It is the Bill of Obligations, the 10 Habits to Get America Straightened Out. I'm ad-libbing there. Richard Haass joins us. He's the President Emeritus of the Council on Foreign Relations and with Centerview
He's like
as
an investment
well as
banker
senior.
now, Tom. He's at Centerview. He's a banker guy.
Yeah, well, he's at, but look at the people he's with. I mean, Richard Case. I mean, for starters, William Edwards. I mean, Anna Centerview Partners is a senior counselor as well. I made a joke that we have to take your book and throw it at people and say, "Shut up and read it." What happened to civics in our school system? Do you blame the education system like Jeff Sachs would blame it? Do you blame the parents like me? Who do you blame?
Civics has lost a lot of altitude in schools. It wasn't an anti-civics movement, Tom. It was more like musical chairs. And we kept adding new requirements, STEM and so forth, and civics just lost out. People assumed it was somehow not necessary. They assumed people would get it by drinking the water. I don't know. But we have failed to tell our story. We've failed to explain why democracy is valuable and important, why it's precious but also vulnerable, what it takes for democracies to succeed. So it ought not surprise us that in polls we're seeing that younger Americans are increasingly shrugging their shoulders, saying, why should I care? Why should I vote? Why does democracy matter? And then even worse, we have things like January 6th, or the most recent poll I saw today, something like 10% of Americans now believe political violence is warranted to realize their political ends.
So, Richard, John from the Fifth Floor writes in here, and he wants to know on that topic there, you were in the Department of State, you were in the Department of Defense. Talk to us about the people that are going into government today to serve this country, to serve their government, to serve their people. How has it changed today versus maybe when you were in government?
All things equal, obviously there's exceptions, Paul, but it's not nearly as good. Okay. The best and the brightest aren't going into government. In part, we've devalued government service. If you trash government enough, if you say government is the problem, which is Ronald Reagan began and people like Donald Trump and the others have accelerated, not surprisingly, people don't want to do it. You don't get great pay. The best and the brightest much more now go to do Goldman Sachs and places here in the financial world. Plus, in the narrow foreign policy conversation, the State Department has been poorly led for the most part in recent years, and it's lost out dramatically to the National Security Council, which essentially is now what Jake Sullivan runs is almost 10 times, literally 10 times the size when Brent Scowcroft ran it.
Wow. Afterthought had to do a paper on Vietnam. Richard Haass, you and I lived this. I realized because of the trauma I faced and others I did not serve, I hadn't read a word about Vietnam. I just pushed it aside in my collective ute. So I went out and read Max Hastings' 900 pages. Great book.
Great book.
All that, just shocking book about Vietnam. And the heart of the matter is we need to get engaged forward. What's the best practice for Trump or Harris foreign policy on November 6th, or frankly, the third week of January? What's the new practice?
What we've got to do, Tom, is avoid two extremes, which have, I think, really bedeviled American foreign policy now for several decades. One is overreach, thinking we can transform the world, kind of what W tried to do in Iraq and Afghanistan, and the other is underreach, essentially some flavor of neo-isolationism, right, assuming that we have no interest in the world, it's not worth it. We've got to find, if you will, the Goldilocks answer, where we continue to do what foreign policy is meant to do, which is shape the foreign policy choices of others, shape what the Russians do in Europe, shape what China does or doesn't do in Asia. That's what American foreign policy needs to do.
I mean, I'm of an age where I kind of grew up from a political perspective and from an economic perspective of globalization. And globalization is good, and the U.S. can play a leading role in globalization, and that can be good for most, if not all, of the world. That seems to be now be in recession here. People are like, America first, or just onshoring friendly. I'm not sure where that goes.
You're right
now.
on both counts. Globalization was good for the most part. Look at how the economies of the world grew at a time, for example, we had quote unquote free trade. It wasn't perfect. Not everybody benefited equally or adequately, but all things being equal, it was I think a benign thing. But yeah, there's been a real rejection of it. We're in an era of deglobalization. Suddenly, free trade is an endangered species. We now have industrial planning increasingly. We have more and more protectionism, more and more blocks. So yeah, globalization wasn't perfect, but the alternative is going to cough up its own real problems.
Richard Haass, thank you for this. You know, folks, I flog Foreign Affairs magazine. It's a price of 2 hotel martinis. Even better, Haass demanded that the font stay large so you can actually read the thing, unlike The Economist. Good morning, Zany. You got to make the font bigger in The Economist. Ambassador Haass, Kurtz Phelan is killing it over at Foreign Affairs on China. From your combine as Emeritus at CFR, Foreign Affairs, your international combine, can Xi amend away from the present Beijing tone?
Can he? Yes. Will he? No. What he's basically done is institutionalized the primacy of politics, person, and party over all else, even at the cost of some percentage of economic growth, even at the cost of relations with the outside world. This is not Deng Xiaoping's China, Tom. This is a qualitatively different China.
My essay last year, I mean, you got Liz Economy at CFR. Haass throws her out the door to go work for Raimondo, and you fill it with Zhang Zhou. I hope I'm butchering that pronunciation. It was my essay of the year last year.
We've also got a very good China expert named David Sachs, who's probably the best young China scholar working on issues of China.
What do they say we need to do? What's the Hank Paulson pixie dust for America with a new policy on China?
Well, partially we need a new policy on us. We've got to stay strong and more united domestically, so we can compete with China. We've got to keep our alliances strong, above all with Japan, and we've got to have more of a physical presence in that part of the world. We'll never get China to give up its dreams on Taiwan. What we want to do is persuade Xi Jinping that to act on those dreams would be foolhardy.
Richard, please give us 30 seconds on what you see in Ukraine and how this might play out. It feels like it's kind of faded to the back pages of the newspaper.
It has. I don't think either side can prevail on the battlefield. So somewhere in 2025, at the latest 26, I believe the focus in Ukraine is going to turn not away from the battlefield towards the negotiating table. I think that's inevitable.
This has been wonderful. Yep. Thank you for the ample time. Richard Haass with us. We only talked about half the themes we wanted to touch upon. He is President Emeritus of the Council on Foreign Relations and was Centerview as well, senior counselor at Centerview Partners. We're going to continue here. We're 30 minutes away from an inflation report. A little bit of more sprightliness. The tape yesterday was dead, waiting for this inflation report. I should point dollar strength. Paul, I have a 149 on dollar yen. Yen continues to weaken.
But you're not going to Japan, are you?
No, we looked at it because it looked good. But we're going to darken the door of Rome, Italy.
All right, I see 1.09 on the euro, Tom. So we'll keep an eye on that.
We're looking good. We're looking for a 108. The difference is a 108 says Fendi.
You're drinking a different type of wine.
A 108 says Fendi, and a 107 says Dior.
Yep. That's how it works there. So anyway,
that's how it works.
That's how it works. It's in most households as well. We got a little bit of a weight to the tape here, just a little bit. S&P off about 7 points, Dow off 40 points, and the Nasdaq off 28 points. But we'll wait for that CPI data, Tom, coming up in about 30
How
seconds.
about those Red Sox in the baseball playoffs?
Oh, there you go.
It's killing. You got to play some Boston
We might
music.
have Mets, Yankees. Who knows?
It could be very good. For Oil Cam Boyd, Aerosmith.
So jaded. is you.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
Why are we upset if we're creating jobs?
Inflation's still a thing out there for the everyday consumer.
With Lisa Mateo on markets.
The economic calendar jam-packed today.
And Michael Barr with news.
Tensions between the U.S. and China have heated up even more.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Paul Sweeney, Tom Keene, Michael Barr. He's in today. Big Detroit game tonight for Mr. Barr. John Tucker in for Lee. Where's Lisa? I mean,
she's. They tell me on assignment, but I think she's sitting by a pool somewhere. Yeah.
A junket.
A junket.
A junket. That's
we're paying for it.
That's a good word.
That's good. Okay. Well, we hope Lisa returns.
She's a player. She can do
it. Maybe before the election. We'll see if we get Lisa Mateo back. John Tucker in as well. We say good morning across the nation on your commute. Bloomberg Surveillance. We're brought to you by Cohn-Resnick Advisory Assurance Tax. Discover game-changing strategies to maximize value, optimize performance, and manage risk. Put your business at the forefront. We thank Cohn-Resnick for truly original and foundational support of the conversations. We have, Paul, the conversation with Ambassador Haass.
Oh,
I mean, that was, I'm about ready to go out and do Civics 101.
Exactly. I mean, I learned a lot there, as I usually do when I speak to Mr.
I mean, all the conversation we've had, and, these are just punditry and opinion. People saying the Montana Senate race is key.
Yep.
And then somebody swung lean this or lean that in Michigan. Do we have a clue what's going on 20X days in?
I don't. Not at all. I think it's a toss-up
across
the board.
And turnout is everything.
And we're not going to know anything, presumably, what the folks are telling us, on election night. I mean, we have to wait a day or two or 3 or more.
I was ordered to clear my schedule, and I have as well. We're going to clear our schedule to a data check. Futures -6 here. The yield space, haven't really mentioned it. I'm sorry. Yield's higher. Wow, 10-year yield of 409. Beach Boys yield, 409 off of that 4% or lower yield. Yields have really come back, and we'll see that in 27 minutes here with the inflation report. From the Interactive Broker Studios, the Bloomberg Business Flash, John Tucker.
All right, equity futures pointing to a slightly softer open on Wall Street. Traders awaiting the inflation data, 8:30 Wall Street time. Earnings season, of course, underway. Delta forecasting profit and sales short of Wall Street estimates. Adjusted earnings going to be $160 to $185 a share in the fourth quarter. Tomorrow, the big banks report. Look for net interest income. That's going to be the immediate focus. GSK shares surging. The UK pharma company agreeing to pay as much as $2.2 billion to resolve court cases alleging its old reflux medication Zantac was contaminated with a suspected cancer-causing agent. Nomura Holdings admitting to Japan's financial regulator it manipulated the government bond futures market. This follows a probe by the securities watchdog into transactions at least 3 years ago. Tesla is set to unveil its self-driving robotaxi tonight. Ahead of that, the stock up 1.1% pre-market. Dow futures down 29, S&P futures down 6, and NASDAQ futures down 24 points right now. This is the only story that matters today. McDonald's rolling out a chicken Big Mac
Yeah.
What? That's U.S. restaurants.
It's un-American.
I did Wendy's at the airport a couple days ago. That was big. First time in like 5 years.
Did you?
Baconator.
The first Big Mac was rolled out where? In Uniontown, Pennsylvania in April of 1967. Stick that in your pipe and smoke it.
A font of wisdom. John Tucker, thank you. Surveillance.
No value.
Fast food correspondent as well. We've got a fabulous list of conversations for you today on your commute. When you're home, at the office, YouTube is the new technology. I'm learning about YouTube each and every day. I saw a picture of Chad yesterday out in the zeitgeist somewhere.
Yep.
Chad invented YouTube.
Oh, yeah? Okay.
He and I
very
were
good.
best buds at Davos.
All right, very good.
Chad did well.
Yeah, he did well.
And it's done weller for Google as well. We say good morning on YouTube. Subscribe at Bloomberg Podcast as well. Marvin Lowe with us right now. And what's so great about Marvin Lowe is not only the academics at NYU and the wonderful 60,000 feet view at State Street, but he has what we call the pedigree that's like second to none. I'm going to repeat what we talked about last time, Marvin, because I'm sorry, it still matters. You were at W.R. Hambrecht and Quist. Huge technology bias.
Big.
Tell us about the technology overlay you observe in our economics and in our stock market.
I mean, absolutely how transformative technology has been to just your regular everyday life cannot be cannot be minimized. Had the pleasure of actually being able to finish Chip Wars this summer. Fabulous book that really talks about how transformative it is, but as important, how important it is to just making everything work. So yeah, that overlay is something that we think about every day, we use every day, whether or not we think about it or not.
Do you guys, to what extent are you and the good folks at State Street buying in on this AI? You lived through the .com. You get kind of what a transformational technology looks like. Is AI one of those things?
Personally, I think it is.
Okay.
I think it's in the very, very early parts of the discussion. The one thing that I think we realized kind of going through the technology revolution over the last couple of decades is that it takes a long time. Disruptive technologies don't happen overnight. They happen over decades, and we're just starting that. Right. In terms of how the bank approaches it, I think every corporation that's well run has a strategy. We certainly do also. Can't really speak to it. We work in a very regulated type of world, so it's going to be rolled out and used properly. But having said that, yeah, you've got to be in that game.
You were a Vestal virgin at NYU, and then you showed up at Eaton Vance, and Eaton Vance said, read Fibonacci. So you and I were inflicted 1,200 pages of Frank Fibonacci.
Yeah.
You write right now about this odd thing, the term premium, the risk that's in the curve, the risks that's in bonds. What's the surprise out there with our term premium in 2026?
I mean, absolutely. Term premiums are still negative at this point. We are going back to a playbook with regard to how much excess returns you need in the bond market that's really sanguine. And I think that that's something that you really need to think through. Do you want to really take a very low premium when, in fact, you've got this fiscal discussion out there? You've got kind of this inflation volatility, which really still isn't settled yet.
Nicely explained. Continue on that theme. Because there's so little risk, there's a free lunch in the market. This fiscal overlay is ever larger?
Yeah, for sure. The unsustainable, and again, all of us in this room have been talking about fiscal sustainability for decades.
Tucker's too young, but continue.
But it's never really resulted in anything in terms of much higher rates or a significant change in the Treasury curve. And if anything, we were able to go through a multi-decade bull market despite the fact we had those issues and concerns. Having said that, it gets very, very unsustainable when interest rates are above, when the interest paid by the government is bigger than defense budgets, when all of the forward expectations are for interest to somehow be manageable because rates get back down to a 3% level. You really have to think about, is that well thought out? And especially, like you mentioned, 20 days out, what's the one thing that we know both candidates are going to probably push for? Higher deficits. The weaponization of the federal deficit is something that shouldn't be ignored.
Yep. All right, Tom Keene's about to go into full earnings analyst mode tomorrow, and J.P. Morgan starts reporting earnings. What are you looking for in earnings this quarter?
You know what? There's obviously the lower than beat kind of mentality that works on the street. You know, the walk down memory lane. I was an equity analyst at one point. Kind of know how that game plays out. Things got lowered fairly significantly going into this, but it's been uneven in terms of how the sectors have evolved, if you will. I'm looking for kind of that sector breakout, looking for the strengths. When you see technology, they're the one sector that actually didn't get lowered. So, you know, that kind of comes into the thought process for me.
Real quickly, fixed income, we're back above 4% on the 10-year, 4% on the 2-year.
Yeah.
What do we do here in fixed income? Do I take credit risk, or I just sit there and clip my government coupon?
You know what? I do think you take credit risk. I like spread risk in here. I still think rate cuts are, you know, going to be supportive by data that's moderating. You know, whether or not we kind of get below 3% on the funds rate is something that the market's going to deal with, but it's not going to deal with it for the next quarter or two.
I need an SPX target out 12 months, 15 months, 18 months. What does State Street feel? We're in a bull market?
I still think we've got a fairly positive risk environment.
Right, that's as close as you're going to get to a quantitative single point guess.
Yep.
Marvin Lowe, thank you. Don't be a stranger with State Street this morning. Let's get right to it. Futures -3, 20 minutes away from that key inflation report. We're on YouTube. Subscribe to Bloomberg Podcasts. Tell your friends, your family, Romans as well. With our news in New York City, Michael Barr.
Thank you very much, Tom, Paul, and John. Milton made a destructive and deadly mess in Florida after a night of high winds, torrential rain, and storm surge. Milton hit the west coast of the state as a Category 3 storm, making landfall in Siesta Key, about 70 miles south of Tampa. It is now a Cat 1 churning in the Atlantic. First responders got to work before the sun came up, racing to an apartment complex in Clearwater, Florida, where more than a dozen people were stuck inside with rising waters. Clearwater's Public Information Officer, Rob Shaw.
We've had multiple calls, possibly as many as 18 residents reported they're being trapped. So we have personnel from Clearwater Police, Clearwater Fire, and the Pinellas County Sheriff's Office, high water rescue teams on hand to try to check on the welfare of those people.
Hurricane Milton's strong winds tore the roof off Tropicana Field, which had been a first responder staging area, and knocked out power to more than 3 million customers. Ahead of the storm, President Biden accused former President Trump and other Republicans of spreading outright lies about the government's response. More on that from Bloomberg's David Gura.
It's been building frustration, I think, from both President Biden and Vice President Harris, and you heard that a couple of times yesterday during these briefings that they gave, and they got briefings from the head of FEMA and from Homeland Security as well. And you look at North Carolina in particular, there have been so many rumors swirling, so much misinformation and disinformation as well, sort of deliberately wrong information being spread about what FEMA is doing, what it can do, even wilder speculation about the fact that this might have been some sort of man-made disaster by Marjorie Taylor Greene, the representative from Georgia.
Bloomberg's David Gura reports Vice President Harris also warned businesses against price gouging, something she's focused on in her presidential campaign. Meanwhile, former President Trump wished for prayers for those who went through the hurricane. The Nobel Prize in Literature has been awarded to South Korean author Han Kang for what the Nobel Committee called her intense poetic prose. In winning the award today, Han becomes the first South Korean writer to win the Nobel Literature Prize. Global news 24 hours a day and whenever you want it with Bloomberg News Now. I'm Michael Barr, and this is Bloomberg. Tom, Paul, John.
Michael Barr, thanks so much. AP has a great summary of what Paul Sweeney has lived for the last 2 days. 15-year-old Nicholas Gutkowski said he was putting his faith in Disney's infrastructure at the hotel where he and his sister were staying. Paul Sweeney, you got out of Dodge on time. Imagine if you'd been there for this. What would it have been like?
It's interesting. We, Alex Steele and I, we left Tuesday afternoon, got out fine, no problems. But we spoke to a lot of people at our hotel, which was just off property down there in Orlando. People were staying because they're saying, hey, and on Friday, it's supposed to be sunny and 75 or 80 degrees, and so they're going to be back at it. So, and I tell you, we were there Tuesday. It was raining. We all had our ponchos on. Everybody was going to the rides. Everybody was eating the goofy poncho. Everybody was eating their chicken legs or thighs or whatever they do down there.
Riding Space Mountain.
Space
How
Mountain.
retro.
Since 2004, Charlie, Francis, and Jean have slapped them, and just west of Orlando, Irma in 2017. I mean, is it 3 days off, 4 days off at Orlando? That doesn't figure into the financials, does
well,
it?
Geetha Ranganathan from Bloomberg Intelligence, we spoke to her yesterday, and she estimated maybe a $125 million hit to operating income for the company.
Right.
So it's real, but it's certainly manageable there. For them.
Michael emails in and says no one cares. Michael Barr, skoo-ball today. Are we going to see him with the Tigers?
You're going to see. You know what? You'll probably see him on Game 5.
Okay, thank you. It's all that matters today. Inflation in 15 minutes. This is Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg News with this Bloomberg Business Flash. 14 minutes away at the bottom of the hour, Consumer Price Index, waiting for that. Ahead of that, the futures, little change. This follows yesterday's record close for the S&P 500 and the Dow Jones Industrial Average. Earnings, Delta Airlines falling just about 3% after management forecast profit and sales short of estimates for the final months of the year. This also suggests a slow recovery from that challenging summer travel season. Domino's Pizza out with the results. They're slipping about 1%. The company trimming its projection for sales growth and new locations. They're blaming slower consumer spending hitting the restaurant industry overall. GXO Logistics, those shares pre-market up 10%. Bloomberg reporting the supply chain services provider exploring a sale. And Pfizer falling over 1%. Its former executives decided not to be involved in Starboard Value's activist campaign against the drug company. S&P futures down 4. The NASDAQ futures 20 points lower. The Dow futures right now down 13. Ahead of the inflation report, 2-year yield up 2 basis points, 4.03%. The 10-year unchanged at 4.07%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that's your Bloomberg Business Flash. Paul and Tom.
John Tucker, thanks so much. 12 minutes away from his key inflation report. I had a start tantrum, Paul. I had a complete meltdown yesterday. Tigers, Mets, Yankees. Would you put somebody on that wears a Boston Red Sox hat?
Oh, boy.
So they went through the Rolodex, and we got Adam Posen. Okay. Joining us now from the Patterson Institute. This is what the show's about, folks. Stavridis yesterday, Ambassador Haass an hour ago, and now Adam Posen of the Patterson Institute. Adam, I got to go to the inflation report. The knowledge we'll learn where you and Torsten Slok, among others, say enough. The Fed's going to stop cutting rates at some point and turn around. If we get non-disinflation vectors today, do we have a Fed that will stop cutting November 7th?
No. Thanks, Tom. Go Sox. No, they won't stop cutting November 7th. They might stop cutting December 31st. I think they are locked in to do another 25 at the next meeting. It doesn't matter very much. The question is, do they start talking more about the risks that they're going to have to go up come second quarter of 2025.
With your leadership and with a great team of people, you've led the charge on educating Democrats, Republicans, the undecided on this word tariff. What's the greatest misinformation out there now on the tariff debate?
Thanks for the plug, Tom, and the team at PIE has done that. And I'd say we have two messages. First, no matter how many times Trump and his associates say it, domestic businesses and households pay the tariffs. Second, the tariffs don't change the trade deficit. Those two things are demonstrably false. We and others have demonstrated it, but we can't seem to get everyone to recognize it.
I seem to remember learning that back in economics class way back in the day here, that tariffs are a tax, but it seems like both parties have kind of unilaterally, I guess, kind of embraced tariffs. I guess it's politically positive, but the reality is, as you're suggesting, it doesn't really achieve much other than raising prices.
It doesn't achieve much. That's absolutely right. There's been a back and forth on the internet and a nice piece yesterday in the Washington Post about washing machines, for example. And that was one of the first things Trump put tariffs on. And it ended up just making washing machines more expensive and not enlarging the amount of production by incumbent U.S. companies. And it got a little bit more investment from South Korea production in the U.S., but it didn't really change the story on production in the U.S. Your point about both parties is valid, but I think the popularity of this is untrue. We've seen a major shift in the last 6 months, a year, from the Biden administration, from talking so much about tariffs to where Vice President Harris is very clearly stating no more tariffs. Tariffs would be tax. Of course, she's not taking that to its logical conclusion and saying, therefore, I want to take off the tariffs that the Biden administration kept on and added to. So there is a contradiction there, but at least she's drawn the line. Tariffs only for very specific purposes, no across the board tariffs, whereas Trump, of course, self-describes as a tariff man.
Right. Well, I think what a lot of folks now they feel like they understand is inflation, because boy, it was real, and it is real, and it's real for so many people. What is the inflation call here?
I mean, it was real. It was spectacular in the wrong way. The inflation coming, in my view, is coming pretty hard come second quarter or roughly of 2025. Worse if it's Trump than if it's Harris, but probably some even under Harris. You're going to have much more than the big effect, not just tariffs, but migration. I mean, they're clamping down on migration at the border. If, God forbid, Trump carries out on his threats to deport people, work done at Patterson by McKibben and Nolan and others, has stressed that will lead to very chunky jumps in inflation, leaving aside the human issues. We also, both parties, I think, are going to be fiscally lax. I know, have discussed on the program the various estimates that a Harris program, if executed, would raise deficits by 1.5 trillion over 10 years, and Trump would raise deficits by 5 to 6 trillion over 10 years.
I got one final question, Adam Pose, and I want to touch on no other think tank, folks, as like the Peterson Institute of Burston in Posen. No other think tank has a staff of emeritus like Peterson. William Klein is one of my heroes, Adam Posen. He is the one, folks, out of Princeton decades ago who screamed our bilateral focus of China, U.S., China, is simply juvenile. William Klein has said we need a more sophisticated multilateral approach. Adam Posen, how do we get to a better world, as William Klein would suggest?
I think the key point of going multilateral, or at least plurilateral, meaning doing things not just focused on these bilateral trade deficits that Bill was right to point out don't matter, are twofold. First, whether it's Biden or whether it's Harris or Trump, the rest of the world has to stand up and get on with globalization. I and others spoke about this at the WTO Public Forum a couple weeks ago. It's got to be the third nation standing up and carrying on trade, investment, openness, and making both U.S. and China feel the effects of their misbehavior. And the other thing is watching what you were just talking about, watching the inflation come in by the mistakes made and hoping that the public says, oh, yeah, that is what we thought would happen. We should change that.
Adam, thank you so much. Adam Posen at the Peterson Institute. I can't say enough about the fire of their website on Harris and on Trump on policy. forward. 5 minutes away from his key inflation report. Paul, you demanded this. You said we got to get Cam Harvey on from Duke.
Sure.
Because Duke beat UNC, and the last time Harvey was on, he was fired up.
He was fired up here. I mean, he's in the camp there, maybe leading some of the charge, saying, for a long time that the Fed was behind the curve, that they should be cutting rates. That real-time data, not the lagged data that the Fed and other groups tend to look at, but the real-time data was suggesting that inflation was already under control and that the Fed could, in fact, begin cutting rates. And here we are. We got that 50 basis point cut from the Fed, and the question is, where do we go from here? So, and how far does the Fed go, and how quickly does the Fed get there? And a reading like today, Tom, of the CPI will certainly go into their calculus as well.
Cam Harvey for Duke joins us right now. Cam, the inflation report is going to be needed by the Fed to get courage. What should they take away from this report today? Frankly, the report's into the end of the year.
So I've talked to you before about this, and it is very surprising to me that the Fed is unable to allow for the way that shelter is incorporated into the CPI to get a reading of inflation that is more diagnostic of what we're going to face in the future. So the numbers that we will expect in a few minutes will have this problem that shelter inflation is vastly overstated. So last month, shelter inflation, as reported in the CPI, was running at 5.2%. And that is completely disconnected from reality. So if you look at rents year over year, they're running between 0 and 3%, which is far away from 5%. If you look at housing prices, the housing prices year over year are flat. Yet somehow we get 5.2%. And that 5.2% is the major driver of the inflation print. So the last print was 2.5%. If you put a more realistic shelter inflation, the inflation going forward, then the rate is not 2.5%. It is in the 1% range. So you talk about courage. I hope that they've got courage to look at the data and understand the limitations of the data. And to do the right thing, we're still far away from the Fed funds rate being where it should be. The Fed overshot, and to make things worse, they waited too long to start the cutting of the rate.
Paul, get one in here, please.
So, Professor, we had that 50 basis point cut, which I'm guessing you thought was reasonable. Where do they go from here, and how quickly would you say?
So what I fear is that the Fed will hesitate. We now know there was some disagreement over the 25 versus 50 cut last time. And I expect that they're not going to have the courage, that they will cut by only 25 basis points. And that is going to leave us in a highly vulnerable position. So yes, you get a jobs report that looks good. One piece of data that might be encouraging, but there's other stuff. Looking across the economy, there's many signs of weaknesses and vulnerabilities.
I think we got to do a remote. We got to go down to Duke.
Sure.
Around the basketball schedule.
Yep.
And just have Cam Harvey here for an hour. You get a huge response when Professor Harvey is with us. We're going to continue with Professor Harvey here. We're going to get the inflation report out of the way and see where that is. But you hear the fire in his voice about,
Imagine sitting there on a Tuesday night from 7 to 9 p.m., though. Futures and options. It's a little rough, but I made it.
But Paul, fighting the last war is what Professor Harvey's talking about.
Yep.
There's a lot of people out there with great respect for, the challenges that Chairman Powell has and others of you're fighting the last war. We're going to continue this discussion with Cam Harvey. We got some other good people coming up here. Let me get the surveillance beauty list here.
Sure.
One of the interns published this out. That's great. Yeah. Sarah Haass.
Some smart people.
Is going to join it. Oh, and Sarah Haass and Rebecca Patterson back to back.
Yep.
Good. It's too much. You should see Rebecca Patterson's Yankee seats. Oh, my word. She's right behind the dugout. Mona Mahajan will be with us as well. We're going to do an inflation update here in the 9 o'clock hour. Excuse me, a hurricane update for you in the 9 o'clock hour. We're less than a minute away from this inflation report. You heard Professor Harvey talk about the oddities of OER and how we do rent. The reality is, as we heard from Lauren Hochfelder yesterday at Morgan Stanley, rents, there's an overbuilding of multifamily, and the rent out west is different than the rent out east. Paul Sweeney tells me that every day. There's some huge micro stories in here, and we'll have that not only here in 30 seconds, but we'll have it for you through the morning, as particularly Michael McKee dissects this. All of our guests will publish as well, so that's a good thing. Futures at -5, they improve over the last hour. The VIX still above 20, 20.84. Let me go to the 2-year yield as your benchmark. 4.04%.
There you go.
4.04%, a higher 2-year yield.
This is breaking news from Bloomberg.
And I'm John Tucker in the newsroom with the latest data. Let's get right to it. Core CPI, when you strip out food and energy, coming in 0.3% last month for the month of September. That matches the prior month's reading, and it is higher than expectations right now. The headline number, 0.2%. Again, that is higher than expectations. Exactly matches the September reading as well. And the immediate reaction, Tom, you're citing the 2-year, that is higher, 4.02%. The 10-year yield, unchanged right now, still reacting 4.08%. 2-year yield now looks like it's falling, still hovering right around that 4% mark. Also got initial jobless claims. That is coming in higher than expectations at 258,000. The expectation was for 230 on that. So you got CPI, you got initial jobless claims.
Year-over-year headline, 2.5 last time. It's going to come down to 2.3. No. 2.4%. So a little bit of, as John mentioned, a little bit of statistical lift here across core inflation, headline inflation as well. And on real wages, I mean, real hourly earnings, inflation adjusted hourly earnings year over year. Paul Sweeney, we saw 1.3 revised up to 1.4 and enjoy a further lift to 1.5% this morning.
Yeah, exactly. So the inflation data coming in just on the reported and on the core ex food and energy, a little bit higher than was forecast, a little bit higher than last month. And initial jobs claims coming in notably higher than expectations. So a lot to market. And we got the market selling off a little bit, Tom. The S&P off 11 points, the Dow futures off 61, the NASDAQ off 57.
Cam Harvey, we continue with. He's with Duke University, a small school down in North Carolina. Fired up about shelter. We'll get the shelter number here. They come out, the incredibly detailed report comes out in drips and drabs. But again, Cam Harvey, as we spoke to Adam Posen and Torsten Slok at Apollo, even if we get stability or the disinflation vector lifts up a little bit, this is a Fed that has to adjust, isn't it?
Yes, and I just looked at the shelter number, and it's 4.9% year over year. So last month it was 5.2. Now it's 4.9. So think about that number. So again, it is completely disconnected from reality. It's the main skew of the inflation, and 36%.
Yeah, 36%
of the CPI.
Professor, we studied at Duke. Paul goes to 2 decimal points, 36.52%. Continue.
There you go. So, and if you just do the simple calculation of that 4.9% and then multiply it by like 0.36, that delivers 1.77%. So 1.77% of the print today is purely due to that distorted shelter number. So if you substitute anything in that's closer to reality, the inflation print is not 2.4%. It is 1% or potentially less than 1%. So we are below the Fed's target, yet they're debating, well, should we do 25 basis points? Come on. This supposedly the Fed is data driven. Well, the math that we just did was not a very challenging exercise.
Let me review the math here, Professor. I love having you on. I mean, this is the real world, folks. You take the number for shelter, 4.9%. You move the decimal point on the weighting to 0.3652, and you come up with that sub 2% number. There's disinflation in real estate, Paul, everywhere but Summit, New Jersey.
Exactly right. You got that right. So, Cam, supposedly you and others like you have these discussions with various folks at the Fed. What is their response for kind of not necessarily looking at that data, at least in that way?
So in the past, I've been a visiting scholar at the Fed, but I've got not very strong connections with the Fed, perhaps because of my social media and critique. So if they listen to me, they listen to me on your show and other media and my social media. And indeed, there's a lot of PhD economists at the Fed, over 400.
Wow.
And again, I hate to call it, but it's a lesson. It's a basic lesson in how you put an inflation number together. And it seems like the message is not getting through.
I got to ask one final question, Professor Harvey, and it's just a general question. Don't throw the chalk at me. Are they fighting the last war?
It's actually a very deep question. And I do believe that they are anchored in the past. And we are far above a Fed funds rate that is reasonable, given the inflation rate that is in real time, which is less than 2%. It's actually closer to 1%. We run the risk, when you keep the rate so high, of creating a self-inflicted wound where we purposely drive the economy into an unnecessary recession. And we're seeing the seeds of a slowdown already. And the Fed needs to be aggressive and to undo the damage.
Okay, well, Cam, we've got to go. Sarah Haass has got her slide rule out. We got to get to her in a moment. You got to love a Professor Paul and his CV, the article, What We Know and What We Know We Don't Know. Exactly. That's the name of the article. Cam Harvey, Duke University. Nice to see you guys take out UNC by a point there in football the other day. Our economic indicators here in inflation and PPI tomorrow. Always brought to you, our foundation economic indicators, brought to you by Commonwealth. Join over 2,000 independent financial advisors who are taking control of their growth. With advisor-centric support and future-ready technologies, grow on your own terms. With a partner dedicated to your success, go to commonwealth.com to learn how. Now, the way this works, Paul, is when John Silva left Wells Fargo, he gave Sarah Haass. He gave Sarah Haass his Kufel and Esser slide rule.
Whoa.
So when Cam Harvey was going through the shelter math, I saw her popping the slide rule, going 0.36 times the weight, 0.36 times 4.9%. Sarah Haass, does the shelter dynamic matter to the Fed?
So I think we've seen a big shift from Fed officials away from the official measures of shelter inflation towards some of the private sector measures, towards some of the fundamentals like Professor Harvey was speaking about. So I think it still matters in terms of the overall picture, but it is not necessarily a holdup to what the Fed is doing or what they are likely to be doing soon, as they know there is a tremendous lag and perhaps an even longer lag this cycle for various reasons. So I think they are adjusting some of these numbers as they go.
How do you think the Federal Reserve then, Sarah, will kind of look at this data today, both the inflation data and the jobs data?
Yeah, so I think overall the report, just in some ways very similar to the jobs numbers, came in a little hot all around. So you saw it in terms of the headline inflation, where you got a 0.4 increase in food, even as you had energy prices coming down. So this wasn't all just a somewhat firmer core. When you look at the core data, so you got a pickup in goods inflation like we were expecting, but it wasn't just a used auto story. It was more broad-based. So there was a 1% jump in apparel. You saw an increase in new vehicle prices as well. And so I think when you combine it with services where, yes, you saw shelter disinflation continue or at least moderate from the big increase we saw last month, you did see other firming in things like transportation services and medical care. So I think overall this might give the Fed, I'm not sure if it's enough to actually pause in terms of their rate cuts, but I think they'll be thinking a little bit more about what is the trajectory of inflation from here.
Unfair question 9 minutes after the report, but it's unfair when Thursday here. Sarah Haass, where is food inflation? I'm hearing that, that people like you are saying, oh, it's over. Food inflation is over. And Jen Tucker's saying, no, it's not. Where are we on food inflation?
Yeah, so food inflation's been running about 2%, so a little bit lower if you're talking about grocery food inflation, which I think is more salient to most consumers and household, but that's inflation. That's the rate of change. That is not the level jump that we've seen over the past 4.5 years, which I think consumers are still struggling to adjust to. So yes, we've seen a significant moderation in the pace in which prices are going up, that we're still left with an overall noticeably higher level, which is still vexing to consumers.
Sarah, how do you think the consumer's doing broadly defined? I just got back from Orlando, Florida, and boy, Disney World was packed despite the fact that a hurricane was coming, and they're not giving that experience away, by the way. It's very expensive. How's the consumer doing from your perspective?
Yeah, I think overall the consumer is still doing pretty well. And I think that corresponds to the fact that the jobs market is still in good shape. Yes, we've seen it cool off from where we were a year or 2 years ago, but we're still adding jobs. And importantly, we're seeing real wage growth. So even as maybe inflation isn't coming down as quickly at this stage of the cycle, we're seeing wages outpace inflation. And so consumers are still able to go out and spend and have those nice Orlando vacations.
Okay, this is a key question. It's my last one. I'm sorry, Sarah, we got to run here just because of the news. So Rob Caroling coming up in the 9 o'clock hour, folks, on Milton. Sarah Haass, if with this resiliency of less disinflation, this resiliency of a certain select prosperous America, are we misjudging where nominal GDP is and thus misjudging corporate revenues and thus misjudging cash flow? Are we just getting wrong out 12 months, the prosperity of America?
Well, I think that has been the pattern this cycle. Is many economists have been just too downbeat in terms of in many ways, the impact of that tightening. And we just have seen more resiliency out of the consumer. We've seen more resiliency out of the jobs market and thus far inflation as well. And so all of that points to a somewhat higher nominal pace of GDP growth and therefore some of the revenue streams of many companies.
Sarah, thanks so much. Greatly I appreciate it. Paul, she's with Wells Fargo. I should say, excuse me. And I love that she used her slide rule to do that. Can't every man. Paul, cut to the chase. Golden Gate Drive, Stone Harbor. Yeah. I think it's where Taylor Swift lived years ago.
Swiftie.
It's not that fancy of a house. Like, it's unassuming. I can tell it's well done. Yep. On the harbor water and all that. Clocking in at $9.99 million.
Yep. And it'll go in a blink of an eye. There'll
And
be multiple bidders on that thing.
I don't mean to pick on North Carolina, just that's where Sarah's act is from. You got X% of people in North Carolina before Helene flat on their back. Yep. Now even more. The polarity of our audience is like it's never been.
I think, and it feels to me that that divide is growing. That's
importantly,
and that's concerning. And I think we see it on the political front, and that really started in my opinion, just from my history, thinking about it, boy, that became a really, really front and center issue in 2016, for me at least, and I think that continues to grow. So there you go.
Wait a minute.
Yep.
Stone Harbor is directly east of Baltimore?
I mean, it's below the Mason-Dixon line. I mean, Cape May is below the Mason-Dixon line. How about that? Cape May.
I am so ignorant. Michael Barr, did you know this?
No.
Exactly.
It's the tippy tip down New Jersey. I mean, they talk Southern.
I got to break out the AAA map again because, wow, I didn't know that.
I get off the Parkway at exit 98 Good thing goes down to 0. That's where Cape May is.
I thought I could commute from there in the Bentley. Forget
No,
that.
no,
That
no,
is
no. You're
out.
getting a Sikorsky.
Sarah Haass, thank you so much. Wells Fargo. Bloomberg Surveillance. Good morning.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg News, and with this Bloomberg Business Flash, the inflation numbers coming in a little hotter than expected. Stock futures are lower, yields little change. So-called core consumer price index that strips out volatile food and energy, increasing 0.3% from August and 3.3% from a year ago. You also saw a further slowdown in the labor market. The jobless claims this morning, they were higher. Earnings season underway. J.P. Morgan, Wells Fargo kicking off earnings for the big banks tomorrow. Focus there, that's going to be net interest income. GXO Logistics rallying pre-market. The supply chain services provider spun off from the trucking company XPO in 2021, exploring a sale. That is according to our sources. The shares pre-market were up about 10%. Delta Airlines forecasting profit sales just short of Wall Street estimates for the final months of the year. This does suggest a slow recovery from that pretty challenging summer travel season. Right now, the Dow futures down 96 points. S&P E-mini futures down 21. The NASDAQ futures 108 points lower. Give you the 2-year, that is down just about 3 basis points. And that is under 3.99. 10-year is unchanged, 4.06%. And we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That is your Bloomberg Business Flash. Paul and Tom.
John Tucker, thanks so much. To go inside the data and to like this, what's the stuff I look at here? And one would be the yen spinning. We've had weaker yen. We had a 149 print today. It's ever so slightly stronger off the inflation report. A non-event. Euro 109.39, a non-event. Oil, it's moving around, and I guess we'll go there. But the 10-year real yield was a 177. It's now 176. Relatively a non-event. Joining us, the queen of non-event analysis, Rebecca Patterson, joins us with all her work at Bridgewater, Bessemer Trust, in various and large banks over the years. When someone like me says this report was a non-event, is there any such thing as a report that's a non-event?
No, there's not. Every piece of data gives you some new information that can help you build confidence in a view or help you change your view. So no, I think even though this number will not change the Fed's trajectory, it probably does give them some confidence at the margin that things are continuing to move in the direction they want, just a teeny bit more slowly.
We also, in addition to the CPI data, Rebecca, we also had initial jobs claims came in a little bit higher than expected, a little bit higher than last month, which takes me to an essay you had in the New York Times today. The good old days of manufacturing are long gone. That's not what the two presidential candidates are saying here.
Right.
What's going on with the labor market and manufacturing?
Well, that's what prompted me to write this essay. So I see both Vice President Harris and former President Trump saying we're going to revitalize manufacturing. And I think it conjures these images of the 1950s, where literally 1 in 3 Americans were employed in manufacturing. Not a lot of college degrees required. It was mainly white men born in America. Not as many women worked. We had a faster growing labor force because women had more kids. So that's the image.
Yep.
The reality today is we don't have enough native-born Americans, so this requires immigration, which is a tough one right now politically. We require foreign help. Some of the technology we need for manufacturing, like semiconductor chips, we need to have allies who are willing to invest in America. And last year we saw trillions of dollars of foreign direct investment come into manufacturing. And then we also need immigration, we need FDI, and we need college degrees. About half of these manufacturing jobs today require college degrees. So we will create more manufacturing jobs, but the president, whoever gets elected, needs to appreciate these realities, and it's not going to bring back the 50s or even the manufacturing we saw in 1979, which was about 19 million workers.
I'm going to get this essay out on Twitter and LinkedIn, folks. I really can't say enough about it. And, I'm going to go, frankly, back to Bessemer Trust, where you wrote Heard there on quiet quality money. We had a technological innovation in steel with a guy named Bessemer a few years ago.
Yes.
Just technology is not going to fix our manufacturing dreams, is it?
Correct. No, technology is going to certainly play a role because we won't have enough people to do these jobs. And in some cases, it makes sense to use technology. But what we have to do today, Tom, is train workers. And I was actually really heartened to see earlier this week, Gina Raimondo up at the Micron plant local high school, where they're training high school kids about technical careers that may not need a college degree. We need more of that around the country.
This is Micron, Idaho, and my book of the year last year, Chip War, which is even more important now than it was 2 years ago. Quality academics out of Tufts University. At Brandeis or Tufts? I can't. They're all Red Sox fans up there. I can't remember. Rebecca, but this is a stereotype, and if Secretary Raimondo is here, I'd say the same question, or Republican Secretary of Congress. The myth and the bias is they work better in manufacturing processes in Asia. They're more disciplined, there's less error, there's just simply better manufacturing processes in China, in India, in Asia. Do we need to replicate that or do something different?
Well, it's interesting. I've been following the build out of the TSMC plant in Arizona, and they've struggled to get enough workers, to train the workers, and then the style of workmanship from the Taiwanese who've come over to the United States is very different from what the American workers are used to.
So what are we going to do? What's your prescription for that reality?
It's a great question. I'm not sure that Americans are going to agree to work exactly like their counterparts in other countries, but we're going to have to find some happy middle if we want to have the productivity growth that we're hoping for from things like having these chip plants and more AI in the United States.
Some economists, or a lot of economists, are saying that the migrant labor that has surged over the last 3, 4, 5 years has actually been absorbed fairly well by the economy. These folks are getting jobs. Their FICA is being taken out of their paycheck, whether they know what it is or not, and taxes are being paid, and they're spending money, and it's part of the economy. Is that valid, do you think?
Yeah, it is. I mean, I was actually speaking with New York Fed President John Williams recently, and he said, and I'm paraphrasing, but it was pretty darn close, we would have never seen GDP growth over 3% if it had not been for those immigrants coming into America. Because as you said, they don't all get jobs on day one, but by and large, they're working, they're spending money. Some of them, depends on the job, are paying taxes, so they are lifting growth. So they are a net positive, and that is one of my big fears with this election. And Adam Posen and others on your show have been talking about this, that depending on how many immigrants we push out of the country and what that does as a chilling effect to legal immigrants, that's going to matter too. This could be a pretty noticeable drag on GDP in the coming years. So we have to be careful what we wish for here in terms of the American population and our policymakers.
Time for one more question. We've got to go back to Patterson originality, which is once again the certitude of dollar weakness, OMG, resiliency, even legit strength. I don't have a 150 print on yen yet, but I got back to 149 today. Right now, 148.40. When does the dollar go weak? Can you give us date, time, hour, month?
Well, Saturday morning at 10 a.m., I think it's local time, in China, they're going to have a big press conference. I believe for the dollar to weaken on a sustained basis, we need to see the U.S. doing okay, but growth overseas having sustained positive momentum. If China does the bazooka for the consumer in China, and we have sustained turnaround in the Chinese consumer, that could be the ticket, because it matters not just for China, but for a lot of economies that depend on China, like Germany. If they don't, if they continue to do this drip feed of stimulus and it's more focused on infrastructure and the supply side, then I think the dollar stays strong.
And you heard the time zones there with Rebecca Patterson. It's out in the zeitgeist, but the answer is on the other side of the world, all that's going to happen sooner than you think. It's not, like a Saturday. It'll be like something like Friday evening, 7 p.m.
No, I think it's literally Saturday in China.
Saturday in China.
So it's not, Oh, right. I see what you're saying. I need more coffee, Tom.
We go to surveillance time zone correspondent John Tucker.
Yeah, that's approximately.
Someone rescue me, please.
Right.
Are we ahead or behind them?
In New Jersey, we're right on target.
Yeah, Jersey, we're right on. Jersey Shore.
New Jersey Standard Time. Bon Jovi could steal that. Rebecca Patterson, thank you so much. The Red Sox are out of the baseball playoffs, so we're playing Boston music. Aerosmith, good morning.
This is Bloomberg Surveillance with Tom Keene and Paul Sweeney.
We're addicted to the parlor game, the Fed, the monetary ballet.
Where do you see opportunities in a fixed income space here in 24?
With Lisa Mateo on markets.
AI affecting demand for cloud computing.
And Michael Barr with news.
Another legal setback for Donald Trump, this time across the pond.
The best in economics, finance, investment, and international relations. This is Bloomberg Surveillance on Bloomberg Radio.
Good morning, everyone. Tom Keene, Paul Sweeney, Michael Barr, Lisa Mateo. Lisa Mateo, she's so out. I mean, it's see ya.
But don't worry. I'm here.
But John Tucker's here. That's a good and beautiful thing. Well, maybe part of it. But anyways, we get Lisa Mateo. She'll be back here before inflation goes up. We had an inflation report. Markets moved ever so slightly. What are we doing now? Waiting for J.P. Morgan tomorrow? Is that the next
That's what I'm doing. I want to hear what Jamie Dimon has to say.
It's time now at 9 o'clock hour for surveillance correction. We go immediately, and because we're journalists, we go to our correction. Uproar on Twitter. Paul Sweeney and the Mason-Dixon timeout chair. So the Mason-Dixon line goes along Pennsylvania, and then it does a 90-degree down the western border of Delaware. Cape May and Stone Harbor are not south
That is
of
incorrect.
Mason-Dixon
That
line.
is incorrect. New Jersey Myth has Cape May south of the Mason-Dixon line, and I'm sticking with it.
You're the only one.
Well, that's what I'm sticking with. That's what they were taught.
In uproar on the Mason-Dixon line. We'll get more research done
I guess that
on
would have been
this.
important in 1860, but less so today.
There it is. Thank you for listening. Thrilled that you're listening on your commutes on Apple CarPlay, Android Auto on Sirius, on the corridor, 99.1 FM Washington, 92.9 FM Boston. It's an Aerosmith Thursday. Bloomberg 1130 AM here in New York. Our flagship Yankees Mets station. We're efforting Sophia Drosis. She's with 0.72 to figure out what the middle relief of the Mets look like. We'll see what she can say. Let's get right to it from the Interactive Broker Studios. Our Bloomberg Business Flash, John Tucker.
I'll put on my southern New Jersey accent, use guys. Hotter than expected inflation print. Core CPI headline prints signal price rises are not slowing as much as hoped, which means yields should be higher. That's not the case. Traders seem to be more focused on the labor report that we got this morning. The claims signaled that the labor market weaker than thought. That argues for lower yields. Applications for unemployment benefits rising last week to the highest in over a year. That does reflect large increases in Michigan in particular, as well as states impacted by Hurricane Helene. S&P futures down 17, Dow futures down 84. The NASDAQ futures right now 90 points lower. The more policy reactive 2-year, that's down 5 basis points, under 4, 396. The 10-year, a basis point lower, 4.06%. We also have earnings. Delta forecasting profit and sales falling short of Wall Street estimates. Domino's trimming its 2024 projection for sales growth. And of course, as you mentioned, the big banks, JP Morgan, Wells Fargo, kick off earnings season for the big banks tomorrow. Net interest income going to be the focus there. Oh, and this one matters. Is this multiple choice? The pass rate for the second level of the CFA test slumping to 47%.
That's still pretty good. That's good.
Yeah.
They had CFA level 1 out the other day. There are 3 tests, folks. And as a wonderful gentleman decades ago at Standish Ayer said, Tom, just take it. It's a rite of passage. But the news there, and you hope, John, it's a precursor for college and younger kids, is the test results are back to pre-COVID. It's really the first graduate results I've seen where the retrenchment of smart from COVID is maybe over.
How much of that have you retained?
It's so overwhelming that you retain, like, you just sort of like take the test. And all 3 times I felt I flunked. I mean, I was sure there's no way I passed. And then you do it.
And you do it.
And then, you go to Mona Mahajan and you try to act smart, and she says, you dummy. This is an important conversation. We get so many people on Wall Street that go, we believe. Well, Smith-Barney. What was the Smith-Barney line years ago? Whatever.
We make money the old-fashioned
way.
We
make money the old-fashioned way. Edward Jones has an incredible character out of St. Louis. They didn't take that path of hot air. Mona Mahajan represents Edward D. Jones nationwide here because they talk to real people about real worries. What are your clients doing now? Not what you're telling them. Yeah. What are they doing at Edward D. Jones?
Yeah, it's a great question, Tom. And look, we are headed right into year end. We're headed right into that election season. Some of our clients are wondering, should they be doing something? Is this the time to reposition portfolios? Should they be cautious ahead of election season? And really, our financial advisors have done the great job of saying, you know what? this is the time really to lean in to any market volatility. And that's really because we're seeing the fundamentals remain intact still.
What's your measurement? What's the Mahajan exuberance look like right now? How foaming are we?
Yeah, it's interesting. I don't think that we are overly exuberant here in the market. There's still a lot of cash on the sidelines in those CDs and money markets. The VIX volatility index is slightly elevated. And of course, we got mixed CPI numbers this morning. We got jobless claims that are elevated. But nonetheless, we are looking at a Fed that is cutting rates, that inflation is still moving in the right direction, and earnings growth, importantly, looks on track for potentially double-digit this year and maybe even double digits next year. So good backdrop.
That's kind of where I wanted to go. We're going to hear from our good friends at JP Morgan tomorrow, start getting some earnings flowing here. What are you looking for this quarter for earnings?
Yeah, it's a great point. And look, we got about 11% year-on-year earnings growth last quarter. That expectation has dropped for this third quarter to about 4%. So the bar has been reset lower, and we know corporations continue to beat and raise. And so we do think that this lowered bar is a positive heading into earnings season. To your point, we'll be listening to the big banks tomorrow. We want to hear not only, how lower rates impact them, we also want to hear how is the consumer doing? How is the consumer feeling? And where are they spending? Is there loan growth on the way?
So, I guess what we hear from a lot of the economists is that by and large, the consumer's in decent shape. Yes, there are pockets of weakness, particularly folks that maybe don't own asset stocks, bonds, real estate, that type of thing, which is a lot of folks. How does that influence kind of the sectors maybe that you look at?
Yeah, and it's a good call out. Look, consumption in the U.S. is a little bifurcated. And when you think about the lower income consumer versus the mid and upper income consumer, certainly that lower income consumer has been facing more pressures with inflation continuing to remain elevated, with savings rates moving lower. But about 80% of consumption in the U.S. is driven by that mid and upper income consumer. And they are, to your point, experiencing better wealth impacts from higher stock markets, rebound in housing. From a sector perspective, we like this idea that this broadening of market leadership has some legs.
Is cash an asset? I want to go to South Tampa, not Tampa, Florida.
Okay.
Hurricane went southness of it. It was very serious across all of Tampa. You got Edward D. Jones on Kennedy Boulevard in Tampa, Florida. They got some problems this morning. They got to pick up the pieces. What's your 3-year view for someone shattered in Tampa with Edward D. Jones?
Yeah, it's a good call out. Our hearts go out to everyone suffering from these natural disasters over the last several weeks. We would say, look, if you can, the 3-year view is anytime you get that opportunity to build your investment portfolio, it is a good time. And in fact, we all know Einstein said that the 8th wonder of the world is compounding interest. So we know that if you start early and if you start often, that is the
before
number one.
age 42 on retirement plans, right?
Absolutely.
Yeah.
Hopefully
Mona,
22.
we got to do a hurricane beat here in Tampa, so we're going to have to leave it. Here, don't be a stranger. Please come in.
Thanks, guys.
Okay. Mona Mahajan with Edward D. Jones. Rob Carolyn joining us now, our Bloomberg meteorologist. Rob, Paul's got hurricane questions, but I got one question. When are we going to stop building on the water, Rob Carolyn?
That's a really good question, Tom. At some point here, we're going to reach a breaking point where, we're just not going to be able to sustain doing it anymore. We're certainly in an upcycle for hurricanes. It's been going on since the mid-'90s. It's expected to continue through at least 2025 or 2026. So this is going to happen again, unfortunately.
I mean, the movies. I mean, Bacall, Bogart, Key West.
Yep.
I mean, that was the romance of hurricanes. Rob Carolyn, there's no romance here, is there?
No, there's not. I mean, this is what got me interested in meteorology, is the fact that you take sunlight and you combine it with seawater and you end up with storms like this, producing winds over 100 miles an hour across an entire state. It's just remarkable, the physical process that these systems, develop out of. And fortunately, this one started to interact with the jet stream a little early. It caused problems with tornadoes yesterday afternoon across Florida, but it also weakened the system. I've yet to be able to find sustained winds of 120 miles an hour. I'm seeing a lot up around 100 miles an hour when it made landfall just south of Tampa last night. And now noticing the winds along the Florida coast are diminishing. Even the buoys 20, 30 miles east of Cape Canaveral are only showing winds now of about 30 to 55 miles an hour.
All right, Florida Governor Ron DeSantis said that the state avoided a worst-case scenario, even as it contends with major storm damage and widespread power outages. So maybe, again, avoiding the worst-case scenario. Rob, just give us a sense, how is this year's hurricane season, and what's the outlook for the remainder of the season?
Well, it hasn't been as active as everyone was expecting, and some of that has been due to the fact we've been in a very active solar cycle, and there is a correlation when you have high solar activity, lots of sunspots, lots of coronal mass ejections, that Atlantic hurricane activity goes down. And where we've been seeing that particularly is a lot of these storms have not come off of Africa and developed and headed into the Gulf or into the eastern United States. They've been developing more in the Western Caribbean and the Gulf of Mexico. That looks like that's going to continue. As I mentioned, we're concerned about the potential for more development late next week in the northwestern Caribbean. That area's had stalled frontal systems. They percolate. You get these storms going. And with the Gulf still being relatively warm, that's an area we have to be concerned about as we go through the last 6 weeks of the season.
But with 2 hurricanes, has the water cooled?
You know, Tom, you bring up a very interesting point. Years ago, these storms would produce what we would call cold wakes. They would turn the ocean over. The water upwelling from underneath would be cooler. It would cool the surface water temperature. Because the oceans have been getting steadily warmer over the last decade, 15 years, that warm water is no longer a layer that's 10, 15, 30 feet deep. It's down 200 and 300 feet. So it's much harder to upwell the cool water from underneath. And that's why we're seeing storms happening in repetitive areas. Once an area becomes good for development, you're not developing those cold wakes, and we're seeing repeated storms in the same areas.
Every time he's on, I learn something.
Yep.
Rob Carolyn,
my job.
Thank you. Thank you so much,
you, Rob.
Bloomberg meteorologist. The reason I was prepared for that question is because if you have a martini shaker, particularly if it's pewter, and if you do it, and the cold comes up from the bottom.
Okay.
And
thermodynamics with Tom.
with Tom.
Keene in your favorite martini.
I can't say enough, folks, about the privilege of having Rob Carolyn with us, and he just nails it every time. And the key question, Paul, I'm sort of he's not predicting anything, but this ain't over, is the summary I got.
No, I kind of thought, when summer's over, September's over, we're kind of over, but that's not the case. We're, going well into October here.
We'll have to see. Let's do a data check and reframe out of CPI tomorrow. JP Morgan earnings, that'll be key. We've also got some more inflation data tomorrow. Business inflation of PPI. Futures -5. They've deteriorated fractionally, -18. The VIX 21.08 is not giving me much information. BitDog, this is because you and Alex were in Orlando.
Sure.
64-ish down to 61,000.
It's just all over the place. I don't know. Is it a store value? Is it speculative? I don't know.
Oil up a stick, 77.57 on Brent crude. And that's quiescent all in all, as is gold. I hear 26.39 on gold. I didn't get enough sleep last night.
Well, there's a lot going on out there. There's 4 playoff games yesterday.
There are 4 playoff games.
There's a lot going on.
Dodgers
Yankees are on again tonight, so now you got to pay attention to that.
Can you see the Mets?
Hockey started. Hockey season started.
Yeah.
Rangers 6-0 over the Penguins to start the season. How about that?
Really?
Yeah.
I'm going out to see Solo Stove at the UBS Arena with the New York Islanders. Bloomberg surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg News with this Bloomberg Business Flash. Underlying inflation rose more than forecast for the month of September, so it represents a pause in the recent progress toward moderating price pressures. A so-called core consumer price index that strips out, of course, food and energy increased 0.3% from August and 3.3% from a year ago. Shelter and food combined, that accounted for over 75% of the overall monthly advance. Meantime, the applications for unemployment benefits rising last week to the highest in over 2 years. And that is the piece that the bond market seems to be following right now. 2-year, more policy responsive there, is down just about 5 basis points, under 397. The 10-year, pretty much unchanged right now, 4.06%. Some specific company news. Former Pfizer executives deciding not to be involved in Starboard Value's activist campaign against the drug company. Those shares down pre-market. Toronto Dominion is going to pay about $3 billion in penalties and face restrictions on its growth in the U.S. They have a settlement with regulators over their failure to catch money laundering. S&P futures down 17, Dow futures down 77, the NASDAQ futures down 100 points. To Rob's point, a solar storm is hitting the Earth today, and it is a severe one. The influx of solar and energy particles poised to arrive could affect power systems and satellite operations, and also bring the northern lights as far south as Alabama.
Well,
so it's down there.
It's been in the news.
Okay. This report, the Futures Report, brought to you by IBKR. Markets never sleep. Neither does Interactive Brokers. Discover opportunities with CME Group futures across equity indexes, interest rates, FX, energy, and more. Access CME futures around the clock at Interactive Brokers. We check the markets for you all day long, right here on Bloomberg. I'm John Tucker, Paul and Tom.
We say good morning to all of you on YouTube. Subscribe to Bloomberg Podcasts. It was in January we started this experience, and somewhere in the vicinity of April, Ray Shillington told me India, Indonesia, and the Philippines. The response we're getting from them in their evening in the Philippines is extraordinary. This is a pleasure. He came out of the University of Notre Dame, SOAS in London as well, and has provided leadership to his Philippines in what to do to extract themselves from the challenges of many years. We're not going to go into a dissertation on Philippine politics, but needless to say, there is a turmoil and tumult which you see with the projection of the United States to 4 military base investment in the Philippines as Mr. Marcos the Younger takes over. Andrew Jerome gone with us this morning of the Philippine Sovereign Wealth Fund. I'm going to ruin the name. Maharlika, did I come close? Maharlika. See, I came close. I got to watch. Close. I got to watch more ABS there. I got to watch more Philippine TV. The turmoil right now, and you see it domestically between Mr. Marcos and, of course, with the debate over Mr. Duterte and all that. But what we really see is the tension in the South China Sea. How does it distract you from investment long-term in the Philippines?
Okay, from a Maharlika point of view, we're looking mostly for phase one at domestic private equity type projects. So we have a dual mandate. We have to make money, but at the same time, we work with the National Development Agency. And so we're very focused on energy infrastructure, digital infrastructure, healthcare, education. So for the moment, it's not the geopolitical concerns in the South China Morning Sea, while worrying, there's a lot that needs to be done in the Philippines anyway.
So what do you do when you see the U.S. fund $32 million to upgrade Clark Air Base north of Manila? That commitment, how does that redound across Manila and all of the 7,000 islands of the Philippines?
Okay. Clark is actually getting quite developed now anyway, right? So the U.S. is doing that, I think, for a certain portion of Clark, for their forward bases. It's good. I think over the years, it seems like America forgot us, and now we seem to be back in the spotlight.
See how direct is he talks, just like Marcos. Yes. America forgot us.
Exactly.
Paul, that's the heart of the matter here. Unfortunately, Mr. Gann is correct. We forgot him, and now we've come back with a vengeance with this 4 base per investment down to Palawan.
Andrew, give us just kind of a backdrop for those of our listeners and viewers who aren't as familiar with the day-to-day of the Philippines. Talk to us about the economy today in the Philippines and maybe how that influences where you guys think about investment opportunities.
Annualized growth. We have a very pro-business president. He's very into foreign investment. He makes a lot of trips to try to get people in. What we're trying to do on our end is to crowd in capital to come into the Philippines. And what's useful, I think, is if you're looking for a partner, we'll put money in. Typically, governments, if they want to entice people into a country, they use tax incentives.
Yep.
We actually will put money in. And it should theoretically also make regulatory everything much easier. But the Philippines is open for business again. We have a pro-business president. Country grew at 6.3% annualized. That's the fastest in ASEAN. So you had Malaysia at about Indonesia.
Say that again. That's important. What was the growth rate there?
6.3.
6.3. Okay.
There's a movie out right now, Nurses Unseen, which is about COVID. And all the medical community of the Philippines, the doctors, the nurses, and all, and what they did in America, what they did at the hospitals in New York.
I should see that.
In all. And that comes down to the remittances sent back to the Philippines.
Yes.
For your sovereign wealth fund and for Mr. Marcos, how important are those remittances of billions back to the Philippines?
They're very important. If you look at our economy, it's about 75% consumption. So we look a lot like America, in fact. Our average age is about 23 years old, which is pretty young.
Yeah.
And our growth rate is 6.3%, as I said. That's the fastest pretty much in ASEAN. And I think we're in the right place because there's really a lot of people who are looking at ASEAN as their big growth area. Hong Kong certainly is.
Yep. So what's a prototypical type of investment that you guys would be interested in your fund?
For instance, we're looking at just 4 hours from Manila. You have a province called Mindoro, beautiful beaches, but they get 4 hours of power a day.
Okay.
Now they also happen to have 2 out of 5 of the wind corridors for the country, and so there's money that wants to go into renewables, but there's no grid.
Okay.
So if you don't have a grid, what's the point of
Do you
all that
need
renewable?
outside investment from the IMF and others to make Mindoro work, Calapan and all that to work south of
we
Manila?
have enough. I mean, we're investing. We welcome co-investments, but we're looking at it, and we're hoping as we go along, we develop partnerships. We've been talking to several pension funds, Western pension funds, North American, and they're all very interested to start doing something with us.
One final question: you've got a sovereign wealth fund. You're burgeoning. I love your ASEAN 6% growth thing. What are you going to do to make Manny Pacquiao help you with your sovereign wealth fund? I know he's in politics, but can you get Pacquiao over to do some investment?
Well, he's running for Senate on the administration slate, so hopefully we can get him to come along when we go on a road show so that at least people want to see him.
You talk about Richard Haass, folks, Council on Foreign Relations, Ambassador and Admiral Stavridis with us yesterday. This is really front and center. Paul, I did not realize the growth rate there of the Philippines on a relative basis.
Exactly right.
Andrew Gunn, thank you so much for the Sovereign Wealth Fund of the Philippines this morning here.
Yep.
Maharlika. See, I ruined. You should see my Filipino language at home.
That's not good.
It's just down in flames.
Thank you so
say
much,
the least.
Tom.
Andrew, thank you so much. Greatly appreciate it.
I think the thing to emphasize about the Philippines is since we've been kind of ignored for a long time, we're very humble. And we're anxious for people to come in and our shingles up, and we hope people will consider us.
We did not notice that at the Keene household. Thank you, Andrew. Greatly appreciate it this morning here. Futures down 18 right now. The VIX 21.09. Please stay with us. In the Philippines and the Pacific Rim in your evening, we're out on YouTube. Subscribe to Bloomberg Podcasts across the nation on your commute. Bloomberg Radio. From New York City and Bloomberg 1130, stay with us nationwide.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg newsroom with the opening bell report from the New York Stock Exchange. Traders this morning, of course, weighing the data showing hotter than expected inflation. At the same time, a slowdown in the labor market. The two-year yield seems to be focused more on the labor data, 4 basis points lower right now, under 397. There you have it, the opening bell at the New York Stock Exchange. Right out of the gate, the S&P 500, 16 points lower, down 0.3%, 57.76 on the index after yesterday's record close for the S&P 500. Also a record yesterday for the Dow. Right now, it is down 80 points, a decline of 0.2%. The NASDAQ 100, 106 points lower. That is down 0.5%. And in the early going, shares of NVIDIA, most active, they are down 0.7%. And we check the markets for you all day long right here on Bloomberg Radio. That's the opening bell report. Paul and Tom.
John Tucker, thanks so much. What a day. It's just been a great set of conversations. And now, I've never done this, Paul. Joining us now, portfolio manager Nouriel Roubini of Atlas America Fund. It's been way too long, Nouriel. We got to get you in here more and more. You're traveling so much. We hardly see you. You've teamed up with Reza Bundy at Atlas America. Are you running money now? What are you learning running money at Atlas America?
We're not yet, actually. We're in quiet period. CCE is now approving our thing, so we'll be launching in November.
So you're in registration and
yeah, exactly.
And all that.
For now, I cannot speak about it.
This is going to be something to see Nouriel Roubini run money. In the world we're in, the great post-pandemic shock has been American exceptionalism, American prosperity. Are you willing to say this gift that we have is nothing but trillion-dollar deficits?
No, I wouldn't say it's only trillion-dollar deficits. I think that a whole bunch of things have happened. We had the Infrastructure Act, we had the IRA, we had the CHIPS Act. We had actually loose migration policies that led to an inflow of workers that increased the labor supply growth and reduced the inflation. So certainly the fiscal stimulus has helped at the margin, but I think also we consider this AI revolution a significant increase in capex by the private sector. Potential growth of the U.S., given technological innovation by the end of this decade, could be, in my view, higher than 3%. That's a revolution, right? China might be growing less than 3% by the end of this decade. U.S. might be growing faster than China. I know it's a bit of a bold prediction to make, but I think that in spite of the dysfunctionality of our political system, we're totally partisan and you name it, the private sector innovation is such in lots of the technologies and industry of the future. It's not just AI, it's robotic, automation, biomedical research, space exploration, new weapon system, agtech, green tech, quantum computing. There is a flurry of new technology going to radically change the economy. And I think part of the strength of the economy that's been growing faster, the potential, in spite of the Fed for the last few years tightening, is there is a shift, there's a regime shift.
Nouriel, you mentioned before we went on the air that you're going to be traveling pretty extensively over the coming weeks here. I suspect internationally they're going to be asking you about your thoughts on the U.S. election coming up. How would you frame a response to some of your international clients?
Well, I think that the major probable risk to the U.S. economy comes from the elections, and the economic policies of a new Trump administration will be very different than those of a Harris administration. If you take at face value what Trump says, he says, I'm going to impose tariffs on all imports in the U.S. of 10 to up to 20%, up to 60% on those from China. He wants to devalue the dollar because he thinks it's too strong and has led to deindustrialization. He wants a more dovish Fed, and he'll have a chance to change some of the leadership of the Fed. And the Center for Responsible Budgets just the other day said that its fiscal policy will increase the deficits and the debt by $7.5 trillion over the next decade. That's well above what even Harris will have it, but it's, unquote, only 3.5. Right. And it will have a restriction to migrations, severe draconian restriction to migration. I don't know if it's going to deport millions of people, but even not letting them in implies a significant reduction in the labor supply. So all these things together, all these policies, trade, currency, migration, monetary and fiscal policy, in my view, imply higher inflation, lower economic growth, higher bond yields, and potential for a correction
So
in equities.
You're not willing to give up on stagflation. A lot of people are saying maybe it's over.
I don't think it's over for the following reason. The three negative aggregate supply shocks of COVID, of course, have gone away. But as I pointed out, the economic policies of a Trump administration, in my view, are stagflationary, because whether it's immigration, whether it's the currency, whether it's trade, whether it's monetary and fiscal policy, they are increasing inflation and they would reduce economic growth. So that, call it stagflation light or stagflation, but they would be stagflationary. And as I pointed out in my mega threat book, there are other forces that are more medium term that are all stagflationary. Decoupling and protectionism, restriction to migration, aging of population, reshoring and friendshoring, geopolitical risks that lead to fragmentation, climate change, new pandemics, backlash against liberal democracy leading to fiscal policies that are pro-labor and union, increase wage growth, and potentially even de-dollarization, gradual, but they will increase essentially
Can you
prices.
model, well, this is your wheelhouse. When you were with President Clinton, can you model a weak dollar?
Can I model it in which sense?
Do you predict a weak dollar?
It depends. You know, if we have a very large fiscal deficits, and if we have very large current account deficit, these twin deficits are going to continue. In spite of the strengths of the private sector, I think at some point the bond market vigilante is going to wake up. And in the last few years, in spite of these twin deficits, the dollar was strengthening because we had tight monetary policy. And therefore, the capital account was essentially compensating for a very large current account deficit. But if that large current account deficit remains, at the same time, interest rate differential are implying that the capital inflow in the U.S. are going to be less, let alone the fact that we are weaponizing the dollar and some country may be gradually de-dollarizing, that would imply over time a weaker dollar. Over time. I'm not talking about the crash of the US dollar, but the counter argument is that there is so much innovation in the US that the inflows of capital are not going to be into fixed income, treasuries, but rather in equities. That has sustained, of course, the dollar for the last few years. If that continues, then that might be partially supportive of the dollar, leading to less of a weakening.
Professor, most of us grew up with globalization as a theme, as something we learned and experienced. But that seems to have reversed itself a little bit over the last 4, 5, 6 years. A, do you agree with that? And B, will that continue?
Yes, I would say that both the trends of geopolitical fragmentation are leading to some degree of, call it either deglobalization or decoupling or de-risking or reshoring and friendshoring, or changing in the global supply chains from just in time to just in case, from China to China +1 or +2, from emphasizing in investment economic security rather than economic efficiency. So the question is not whether, the direction is one towards fragmentation is going to continue given geopolitics, given AI, given other pressures that are on labor income. The question is not whether, but only how much and how fast.
Nouriel Roubini with us here, folks. The Dow -92, the VIX 21.23. A little bit of weight to the tape this morning. Nouriel, with all that said, we're in a bull market tomorrow. J.P. Morgan earnings for the last 10 years. Annual return on J.P. Morgan's 12, 13, 14% per year. How do you explain the lift in asset valuations in America?
Well, I explain it by the fact that one, we achieved a soft landing, and we achieved it not because of what the Fed did, but because we got lucky. Those three negative aggregate supply shocks of COVID reversed themselves.
You think the Fed got lucky?
They got lucky because in any other situation, the Fed going from 0 in QE to 5.5 in QT would have led not only to lower inflation, but also to significantly lower growth and even a recession. Now, we had the lower inflation, but we did not have the recession. Why? My explanation is that three negative aggregate supply shocks of COVID, the impact of COVID on supply of goods and services and supply chains and labor went away. The impact of the shock of Russia, Ukraine on commodity prices went away, and China phased out the zero COVID policy. On top of those three, we got other things that happened. One was immigration, 2.5 million people entering U.S. for the last 4 years, documented or undocumented. That kept the lead on wage growth, increased growth. We had the AI revolution that also has led significant increase in private capex. So all those factors explain why we said stronger growth and inflation went lower. Was not really the Fed. It was just we got lucky and we got immigration and we got the AI revolution.
Geopolitical risk, that's front and center for investors really over the last several years, probably more so than it has been in a while. Yet markets have seemed to churn higher. How do you factor, whether it's coming out of Ukraine or the Middle East, how do you factor that in?
Well, my explanation is that for the time being, markets have correctly estimated that all these conflicts are regional rather than global. After all, Russia and Ukraine is very ugly. It has damaged severely the Ukrainian economy, has caused some damage to Russia. It had initial impact on global commodity prices, but now more oil and natural gas from the Middle East, the U.S. has led to even the European being able to phase out the Russian oil. For now, the conflict between Israel and Hamas was on Gaza. There is a risk of regionalization. So far has not occurred. And the Cold War between U.S. and China is a Cold War, but is probably not escalating at the speed it's going to become a hot war in the short run or having global consequences. So I think markets have correctly said these things are terrible for specific countries and regions, but they don't have a global impact. Of all of them, I would say the biggest risk today is that if Israel were to go and strike Iran, and there is a consensus within Israel, not just on the right, Netanyahu, but even people that are on the opposition, like Benny Gantz has said, we have to get rid of this regime in Iran. Then if Israel were to go to try to achieve regime change in Iran, you could have really a conflagration in the Gulf. You could have essentially the production and export of oil from the Gulf being blocked for several months. And you could have a shock like 1970 Yom Kippur or 1979 Islamic Iranian Revolution. I think that's the biggest risk. And by the way, if Trump gets elected, the chance is going to give a green light to Netanyahu to go and say, bomb the hell out of Iran, get rid of the regime, will be higher than under the Harris administration.
Where does Turkey fit into this? Your father moved rugs in Turkey years ago. Nouriel Roubini on the next Erdogan. What do you expect to see there?
Well, the economy is still quite fragile. The good news that he put in place as finance minister, Mehmet Şimşek, was actually very mainstream and orthodox.
Ex-Merrill Lynch, yeah.
Yeah, he's very good, and therefore inflation is gradually falling, but still too high. But they're going at least in the direction that are less heterodox economic policy and gradually more orthodox one. So I would say that actually Turkey is a country that, based on overall fundamentals, strong manufacturing sector, innovation, good financial sector, could do well.
Okay,
could do
for
well.
Atlas America, we've heard this, Nouriel. Are you telling me, I got 30 seconds,
Yes.
are you telling me you're long Turkish lira? Is that going to be your first trade here?
No, I'm not long Turkish lira because the inflation rate is still too high and the amount of monetary and fiscal and credit tightening is not yet sufficient. But I'm saying at least they're moving in the right direction compared to what was the situation before the last presidential election. So finally, Erdogan has realized there was a risk of a currency and a financial crisis. He gave power to some orthodox central bankers and finance ministers, and therefore the economic policy are moving in the right direction.
Don't be a stranger. Nouriel Roubini, it's been way too long. Thank you so much. With Atlas America Fund, Roubini Macro Associates, and of course his affiliation with New York University over the years. Really can't say enough about it. Look for his books. I'm begging for a new book from Roubini, but he's on the Gulf Stream. He's traveling here, traveling there. He can barely write the thing up, Paul.
I know.
Dow, negative 123. What do? We got to wait for Jamie Dimon tomorrow to save us? Is that what's going to happen?
I think so. I'm going to hear what he has to say about what his customers are doing. Are they?
You mentioned net interest margin.
Yeah,
is the mystery. I mean, like basic banking 101.
I like to look for new loan growth. Are his customers coming to him and saying, "I need capital to grow"?
Yeah,
that's what I want to hear.
Totally agree. That came up today with an earlier conversation, and I totally agree. Everybody in the media is focused on bank dynamics, and what it's really about is customer dynamics as well. Dow, negative 121, the VIX 21.23. From New York City on YouTube, Bloomberg Surveillance.
Markets, headlines, and breaking news 24 hours a day on Bloomberg Radio, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg newsroom with this Bloomberg Business Flash. After we set records for the S&P 500 and the Dow Jones Industrial Average in yesterday's session, stocks right now trending lower, modestly lower, we'll call it. S&P 500 down 17 points. That's a decline of about 0.3%. We're at 57.75 in the index. The Dow Jones Industrial Average 113 points lower. That's down 0.3%. The Nasdaq 100 79 points lower. That is down 0.4%. Inflation rising more than forecast in September. The core consumer price index, which strips out food and energy, increasing 0.3% for a second month, disrupting a string of lower readings. Meantime, applications for unemployment benefits rising last week to the highest in over a year. And that's the piece that the bond market seems to be focused on right now. The two-year yield is down about 5 basis points. That is at 3.97. Interfering the worst from Hurricane Milton, investors in catastrophe bonds, they appear to have sustained losses well below those predicted. Estimates had indicated the bonds would lose as much as 15%. They've now been replaced by calculations showing investors more likely to see a hit in the single digits. Earnings season underway. Tomorrow we're going to hear from the big banks, including JP Morgan Chase. Immediate focus is going to be on net interest income. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Paul and Tom.
John Tucker, thank you so much. He is authentic. His name is Howard Jeffrey Rose, and he's become a national household name because of his craft. Out of Brooklyn, out of Cardozo High School, 30 years almost with the New York Mets. The sixth inning last night.
2-1 to Lindor. Now the pitch. Swinging a drive towards the gap in right center. It's pretty deep. It's back near the wall. It's gone. It's gone. Francisco Lindor. He may have just outdone himself. He has hit a grand slam into the Phillies bullpen in right center field. The Mets are leading by a score of 4-1.
Howie Rose, WHSQ AM. We were going to speak to Janet Lauren about endowment. Forget about it. The Mets are endowed, and Miss Lauren was there last night. Third base in the cheap seats. What was it like in the sixth inning when that ball was launched?
It was amazing. I wasn't really expecting that, and nobody was. And my husband and my son and I and my brother-in-law, we were just all jumping. I was afraid I was going to fall over. It was
Their
so
seats
exciting.
were so good, I'd have to mortgage the house to sit where
I
they
know.
were
I mean,
sitting
Janet
last
does have a day job. She's supposed to write about, endowments in higher education. But I'm reading her article yesterday. About Steve Cohen edges towards baseball glory as the Mets keep surprising. I mean, they've got the payroll this year, but I don't think people really expected them to go this far this year. What's happening with the Mets?
Well, they didn't start out so well, and he had a huge payroll last year, and they got rid of Scherzer, Verlander. And, what a last couple of weeks, and Grimace and OMG and Lindor and Howie Rose's call in the Milwaukee game with Alonso's home run.
I got to run to Carol Mass. Carol Mass is such a prima donna. I mean, I got to run to this, but just one final question. I do want to get you back on your incredibly important essay on endowments. You're dreaming of Yankees Mets. I mean, come on.
No, I don't know. I grew up a Cubs fan. I had to switch teams as a condition of marriage to the Mets, but I hate the Padres because what they did to the Cubs in 1984.
God, she's like, I can't keep up. You hate the Padres?
Steve Garvey, that home run. They beat. I had World Series tickets for the Cubs in 1984.
Can we get her, Rich? I mean, she's killing
let me go to. I mean, we had this piece. I have to go to her because I just love to when we talk about Harvard and maybe they're not at the top of their game in certain aspects.
Oh, you like that, dude?
I like this story here because they're at the bottom of the endowment returns for the Ivy League. That is their comp group, the Ivy League. What's going on at Harvard and their endowment? I thought they were like the bomb.
Well, they were 20 years ago, and then they switched things around. There were a lot of complaints that they paid their managers way too much for extraordinary returns, and then they switched the whole system around. In 1984, Jack Meyer left. I'm sorry, 2005.
Okay.
Jack Meyer left.
Yes.
Did he leave or was he thrown out?
Well, he wasn't thrown out, but there was a lot of pressure because, again...
Why?
In 1 year, they paid a manager $35 million.
To manage umpteen trillion dollars.
Billion dollars. And they had extraordinary returns. People found that unseemly.
All this is about is they thought they were making too much money.
Meddling with the investment strategy. They changed it up, and then they had a revolving door of managers, including
making less money,
making considerably less money. Now, Jack Meyer wasn't paid $35 million. It was the managers, the traders.
No, I understand that. But what about other endowments? Darden. I did a thing at Darden when they were number one or whatever, down at UVA or Texas.
They weren't number
or with
one.
others. Have other endowments taken the Harvard route? OMG, those CFAs are making too much money?
Well, Harvard was actually more like an internal hedge fund. They employed over 200 people, and they were individual traders. And at the same time, Harvard was killing it. Yale had a different model where they farmed out their money to outside managers. And the outside managers, were not employees of Yale, so they didn't show up on the tax return.
But the Yale model, as I understand it, was stocks, bonds, but a heavy dose of alternatives.
Mostly alternatives. They wanted the illiquidity.
Is anybody outperforming the Standard & Poor's 500, the Mag 7? I'm serious.
Well, I mean, the S&P returned 23% in this time period.
Anybody getting that done?
I don't think so. We just had a story about Michigan State getting 15% returns.
Not
and
bad.
They're 40% equities.
When you look at Sharpe ratios and that, are they underperforming even after risk reduction?
Well, that's what Harvard talks about is they're worried about the risk.
Right.
And if you go back to 2008, what happened, you understand why they were selling their private equity on the secondaries. They say their risk level was way too low for them.
Okay, talk to your agent, Reto. And we need you here daily in the 9 o'clock hour for some baseball analysis.
Well, I covered the Cleveland Indians in the playoffs in the late 90s in my first job in Akron, Ohio.
Are the Tigers for real?
I don't know.
Okay. Janet Lauren, thank you so much. Brilliant on the New York Mets. Thank you for the Howie Rose effort. He's just really special. Janet Lauren, Bloomberg News here. Tim Stenovic with us. Masters on Rodeo Drive.
I know.
Early morning breakfast, overpriced.
Sure.
Tim Stenovic joins us here with Lucas Shaw's Serious Extravaganza Screen Time 2024. What do you expect to see, Tim, today in Los Angeles?
Well, we had Snoop Dogg last night, and I got to tell you, I was at the event. After it, I know. Where do you find Snoop Dogg at a Bloomberg event? The answer is Screen Time out here in Hollywood. We got a great program coming up. Everybody who's anybody in this town is here. Kylie Blair, the CEO of OnlyFans. Everyone knows OnlyFans is like this platform for creators, mostly adult content. They're trying to branch out and go to chefs, go to other types of creators like those folks you'd see on TikTok, those folks you'd see on Instagram. They're trying to grow there. We're going to hear from her a little later. Bella Bajaria, the chief content officer over at Netflix. Scooter Braun.
Yeah.
People know Scooter Braun from, touching every basic, every type of music. He's represented the biggest musicians in the world. He's going to be on the stage today. So great program out here in Hollywood.
And Tim, I mean, all the strikes are in the rearview mirror. Is it full steam ahead for the creative types out in Hollywood? Is that the buzz you're getting out there?
Yeah, full steam ahead. AI, a big part of the conversation this year, where it wasn't a little bit last year, but it's like a really big part of the conversation this year. I'm doing a panel with the co-founder of a company called Kubrick. And what they do is they create these immersive worlds that typically people created using computers. What they can do is use generative AI. So you type in a prompt of a certain alien world that you want to see for your film or TV show or your commercial. And it just shows up. They use they use the NVIDIA chips, and it just shows up.
Right. Tim, do you have tickets for Padres Dodgers tomorrow?
I'll tell you, nobody here was talking about the Mets last night. Everybody was talking about Dodgers Padres. Nobody cared.
Yeah, Tim Stenovic, a famous line. Tim Stenovic, thank you so much. With Carol Masser in Los Angeles. Lucas Shaw killing it for Bloomberg on entertainment. Did you say I said nobody cares? What's that about? I care about Aerosmith. Good morning.
There's nothing there.